Hey Joshua, how's it going? Hey, can you hear me? Hey guys, how's it going?
What's up, man? How you doing?
Can you guys hear me?
I can hear
Yeah,
you.
hi.
Maybe there's. Oh, that's why. I had my speaker set to the wrong thing. Can you guys hear me now?
I can
Yeah,
hear
we
you.
could hear you.
There we go.
You
Perfect.
couldn't
Awesome.
hear us. That's
Yeah,
strange.
yeah, I can hear you guys. Yeah. I had my speakers set. For some reason, Zoom defaulted to my microphone as a speaker, which
Oh,
I don't understand how that's even possible. But okay. How you guys doing? How have you been?
okay. Well, yeah. So you get to come home to a wicked storm, right?
So far it hasn't started
Oh, it
snowing
hasn't
yet, but
gone.
I have heard in New York
Yeah.
there's a storm, so I don't know if it's heading here or not.
Oh, I see.
Yeah, let's see. It doesn't
Well,
seem too bad on the
oh,
forecast, actually.
I guess I just think of East Coast as like everybody's together, you know.
Well, a lot of times it is. A lot of times, like you're not wrong, right? A lot of times when we get hit with a storm, New York does too.
Right. Yeah.
But I think this time it might miss us because, like, I do see some snow later tonight, but it doesn't seem like anything that crazy.
Do you get a
Like,
lake effect where you are?
yeah, we
Or,
do. Yeah, we
yeah.
do.
Okay, so you
Yeah.
probably get a lot more
Yeah, I mean, usually we
snow.
get quite a bit of snow. When I grew up, I mean, there used to be like a lot of snow in Toronto when I was growing up. These days, I feel like global warming's kind of killed that or something, you know?
Right.
We need more global warming around, you know? But yeah, I mean, no, it doesn't seem it's gonna be snowing that crazy, but it does seem, look at the calendar, it's gonna be like every second day we're getting snow, which will be
Mm.
fun. But I bought a snowblower, so that helps, you know? Yeah, I need to get down to your neck of the woods. I'm actually going to be in California. I booked my trip. I'm going to be in
Hmm.
San Francisco from
Oh,
March 10th to March 24th. So for two
that's
weeks.
a long time. Wow.
Yeah, yeah. So it should be good. Should give me a chance to meet up with a lot of people, go to a lot of different meetups and stuff. I want to visit the Stanford campus for a bit, see if I can maybe meet some people out there. So yeah, should be fun. Should be good. Action packed 2 weeks, you know?
Hmm. Yeah. Talk
Yeah.
to some VCs.
Yeah, I'm gonna try to set up some meetings ahead of time, see if I can meet with some VCs. Um, and then yeah, I mean they have like these like in San Francisco, I don't know if you've ever been, but they have these meetups very, very often, right? Where
Oh,
like VCs are just like all like VCs basically like are half the people in that city, it seems. So you
yeah,
get to
right.
walk out the window and hit one. Um, I was doing research the other day, and I don't, it's kind of a crazy fact is Silicon Valley in terms of venture financing, in terms of like, for startups, is a third of the entire world. So it's almost as much as the entire world combined inside of Silicon Valley. Just wild. But you definitely get that sense when you go there because it's like almost every single meetup you go to, almost every single, you go to a coffee shop, there's a VC like everywhere. They're all
Hmm.
asking, like they're all trying to figure out where to spend their money. So
Hmm.
we'll give them a reason, We'll give them a
Yeah,
place to
exactly.
spend it. Yeah. Yeah. Have you guys been?
Good, Robert. I've been well. How are you?
Been good, been good. I think we spoke since I got back, anyways.
Yeah,
But
I got a
yeah,
little debrief of your trip. Sounds like you guys had a nice time, got some good sun,
yeah,
and
definitely.
now you're back to the same old routine again.
Yep, yep. Until heading to SF in a few weeks.
Yeah, good.
So
Good break.
yeah,
California's
exactly.
beautiful. Yeah.
Yeah, it's definitely very nice out there. Yeah,
Yeah.
you know,
Well, right now it is. It was last week was we had like this, I mean, comparatively it was horrible weather. I mean, we had these like storms that were just they relentless rain.
yeah,
Even down here. Yeah. I
I feel like
mean,
I can't trust anyone from LA saying there's bad weather because it's
no, 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 but it was
like
like,
what everyone
I
else
mean, the
calls
thing is,
regular
I mean, it was
rain, you guys call torrential downpours, you know?
no, what? No, I mean, it's no joke. And then,
Yeah.
not where I live, but other people, if you live near the hill, we had this big fire last year, right? And then so
Mhm.
all the brush is gone, and so when the big rain comes, it's like this, you get these mudslides. I mean, it's like nuts.
That's pretty dangerous. Yeah.
Yeah,
Mudslides
it's
can
crazy.
really cause problems.
Yeah.
Yeah.
So so it may not be that cold, but it definitely is um, epic weather.
Yeah, you definitely got something going on there. So were there like a lot of mudslides or like what ended up happening?
Not this last time, but it was a lot of rain.
Okay. Yeah, it makes sense. Yeah, I might actually make it down to LA as well. I'm debating. Kind of depends on a couple of different factors, but I have the tickets that I booked are refundable. So, and the reason why I did that is because I might come back on March 24th, or I might just go with my wife down to LA. And then we have some friends down in like around San Diego.
Hmm.
And I have another friend around Orange County who's been kind of talking about potentially investing in us for a while. So wouldn't mind going out there to meet up with him as well. So I might be in your neck of the woods too.
Oh, yeah.
Yeah, because I think Burbank is pretty close to LA, right?
Oh, yeah, it's real close. I mean, the
Yeah.
airport, um, is right there.
Yeah.
Yeah.
Nice. Cool.
So now Pasadena is about 10 miles away. I
Okay.
mean, yeah, if I can
Actually,
fly out,
you're in Pasadena, right?
yeah, Pasadena.
Yeah.
Yeah.
For some reason, I thought Burbank. Um.
Well, no, there's the airport. Burbank has the airport.
Okay. Yeah, that
That's
makes
the best.
sense.
If I can fly out of there, that's where I do it. But it's
Okay.
not, I mean, the number of flights is just small compared to LAX.
Yeah, that makes sense. Yeah, I mean, if we're around your area, maybe we'll go
Yeah,
grab a drink or something, you know?
that'd be cool. Yeah.
Yeah, definitely. It's always nice to meet people in person. Cool. How are the rest of you guys doing? How's we've been off for 2 weeks now. How are the rest of you guys faring with all that?
Doing good,
Well,
man. Good.
I, I had a position in IBM, so that wasn't so much fun yesterday. But
Oh, what
then
happened to IBM?
huh? Oh, got hit by IBM has all this COBOL code, right? And legacy business stuff. And I mean, basically all the credit card companies live off.
Whoa, that's a big drop.
Yeah, it was
Holy crap.
10%. Yeah. And so Claude came out with a statement that they had you know, a COBOL code, and the market didn't like that.
The market seems to be reacting really badly to
Yeah.
all the latest AI news. Like when Claude Cowork came out, like the whole market crashed basically. It was
Yeah,
just nuts.
exactly.
Yeah.
Yeah. Yeah. But
I
then it
mean,
was offset today
I
by
mean,
AM, actually AMD and Meta came up with a deal, like 100 billion deal for buying their AI chips. So AMD had a good day. So
nice. Yeah.
yeah, that was good. And I
Yeah,
have
I
a
think
position in that too.
yeah, I meant to buy some AMD a while ago. I probably should have bought that. But I don't get it. Like I don't understand why there's all these reactions to when this AI is coming out. Like I mean, like do people not seriously understand what's happening in AI? Like do they not get it? Like why does Cowork have to come out for people to understand what's possible? Like Claude Code is like 10 times more powerful than Cowork and has been around for like a year now.
Yeah.
So like
Yeah.
why is this a surprise? I don't understand. Yeah.
Yeah.
Although I
Yeah.
gotta say, I set up my wife with Claude Cowork, and she's been loving it so far. We set up the browser automation for her. You could like do like a Chrome extension, and it could like control your browser, and it's been like doing all sorts of really cool stuff for us. So
Oh.
yeah,
Well,
yeah,
can you talk to it and it'll like move between websites or
yeah,
what?
yeah. Fully control your browser. I mean, I've been doing this in Claude Code again. I've been doing this in Claude Code for a while now. So I'm
Oh,
surprised that people are like shocked by this, right? Because like this is not new, right? The new thing is that it's like in this nicely wrapped bow tied thing, right? But but yeah, no, I mean, like for example, what I've been doing since the weekend is we've been actually trying to push further into like selling to companies. We want to sell more to more hedge funds and family offices. And like I did a lot of research around that over my vacation. Just kind of took some time to disconnect and really made did a lot of time. It took a lot of time to research and stuff. And B2B just makes a lot of sense for us to be pushing into right now. And I started doing a lot of that stuff. It's just like I have like one agent controlling my LinkedIn that's like sending messages and stuff through LinkedIn, sending connection requests, sending messages, all that kind of stuff. It's actually communicating with people over LinkedIn. I have another one like going into Upwork and applying to jobs and basically getting like, different family offices from there, which is like pretty easy money actually. Um, then I have like another one that's like working on, different things. We have like a Upwork job posting for salespeople, or not Upwork on LinkedIn job posting for salespeople. We have that automating. So I have like these AIs constantly going to all these different websites, right? Like I have like maybe four or five of them going at the same time in my Firefox browser. Um, so I mean, like the whole co-work thing is like, okay, great, you could do one. Like, I mean, I'm starting to think about like drone swarms, or I'm starting to think like, how do I run like 100 of these at a time? You know what I mean? Like, I feel like the market is kind of behind on this, and I don't disagree with kind of some of the directions with things. Like, I mean, Salesforce, I think is needs to worry a bit, and same with a lot of these other software companies. But I don't know, I'm just surprised on how far behind the market is. Like, they don't seem to understand what's happening with AI, you know?
Hmm. Yeah.
Yeah. And it's strange too because people are saying AI is a bubble, but at the same token, all these software companies are dropping like flies, right? So
Yeah.
which one is it, right? Is it a bubble or is it going to completely change the world? Like we got to pick one, right? Like, yeah, that's my opinion, anyways.
Yeah. Well, you know what's wild is that instead of talking about like gigaflops of computing power, they they talk about the number of gigawatts of megawatts of regular just electricity that they're
Hmm.
which I don't know, maybe they're just trying to relate to people who don't understand what a gigaflop is, right? Or a petaflop or whatever, it is with these things. But you know, because, so I mean, what it really shows is that what you want is a very efficient, much more efficient chips. So,
Hmm.
that so if that market is turning over every 3 years, if you can make your new compute stations, twice, twice as efficient in a couple of years, then your power bill goes down, right? So it- I don't see any lack of y- um, you know, I mean, NVIDIA is going to be in business for a long time, right? Making new chips, and they're going to have to replace them. So I just wonder what they're going to do with all the old ones.
Well, I mean, it's my understanding that they're still running all the old ones, right? Like the
Uh-huh.
demand for compute is so high that it's just additive, right? Like
Oh,
when a new chip comes out, you turn on those chips, but you also keep the old ones on, you know?
hmm. I see.
And
So it's sort of rolling. There'll be sort of a rolling thing. So you get rid of the really old ones and put the new ones there, right? And you roll
I
the.
mean, I was listening to someone, I think, who was it, Mark Zuckerberg or someone was talking about this, and he's like, I don't know what you're talking about. He's like, they're running chips that are 10 years old. You know,
Oh,
like, yeah.
wow.
This the demand is so high, right? Like you can't get enough compute. Like no one can get enough compute right now. So like you're just not turning off any old chips unless they're like actually broken,
Hmm.
right? So that's what I'm hearing, right? And it kind of makes sense if you think about it, right? Like I
Yeah.
mean,
Yeah.
yeah.
Hmm.
Yeah, people are still willing to pay for them, right? So, I mean, I don't know. I think if they come out with, new chips, I think it's just going to keep going like that. It's like the bottleneck really seems to be chips right now, but it seems like everyone that I've listened to in the tech world is saying that electricity is going to be the bottleneck very shortly. Yeah.
Hmm.
Because I mean, at some point they're going to be able to produce enough chips, but then they just won't have enough power to actually turn them all on,
Yeah.
right? And then what, right? Yeah. And then China basically turns them all on. You know what I
Yeah.
mean? Because they have the power, right?
Mm.
Yeah. Cool. How are you doing, Maurizio? How have your
I'm
investments
doing
been going?
good.
Yeah. Doing good?
Uh, not good, but I'm not worried. I'm pretty sure Palantir will come up with something this week coming up. Any few
Yeah.
days, a new partnership again. So yeah,
Yeah, it makes sense. Palantir keeps sliding, huh?
but yeah, but I'm not too worried about it. I mean, a lot of analysis have it going up to 185 or higher, so I'm okay. They got it up to
Okay.
210. They might hit
Interesting.
up to some analysis have it up to 55. So I'm not too worried about it.
Yeah,
You
it's
know,
definitely keeps sliding.
the only thing, yeah, I mean, it's staying at a low at 129, 130. It's been there for like 2 or 3 days now. But I'm pretty sure they'll come up with a new announcement, a new partnership pretty soon, and they'll go up again.
Yeah, maybe.
I wouldn't be. No,
Yeah, well, they had
that's what they've
something.
been doing like almost every week.
Yeah,
Yeah.
they had something last Friday, right? They had a new
Yeah,
contract.
they got another $1 billion contract last Friday, with the Department of Defense, I think.
Yeah.
Yeah,
Yeah,
that's
so I
good.
was sort of surprised. I was surprised that the price didn't kind of go up uh, because of that, but maybe it was
Yeah,
anticipated.
everybody's still on their like it'll go up one day and then down. It went up
Yeah,
to 144 and then it came back down. I mean, it's not a big deal.
yeah.
It's just staying down there, and I think it's just the build up before and then another big short squeeze.
Oh, yeah.
That's what I believe, you know, because I don't see it going anywhere down anytime soon more. It kind of plateaued at 130, 125 around that range.
Yeah. I mean, I don't know. I'm still really worried about their valuation personally, you know?
Yeah, you know what it is, but it's a risk.
Yeah.
I was like,
It's definitely a risk.
I made so much money off of them. I was like, yeah, I'll risk it. I was like,
Yeah, it makes sense. Makes sense.
yeah.
Yeah, I think
Well,
I made like 500% off my holdings with them, and then I sold everything. I was like, I'm out. After a short seller report came out and I checked the valuation, I'm like, you know what? I'm good. You know, I made enough money.
Yeah, you
yeah,
know what? I made 200% off the like dead. Like I mean, I just let it sit there. But I've been playing like option games with it, like where I'd buy like 4 contracts, and then boom, it shoot up, and I'd sell like half of them, and then other game shoot up, and I've made money that way too. So it wasn't. I didn't lose.
Yeah, it makes sense.
yeah. Well, what happened with me is it was about, I don't know, 3 or 4 years ago or so. I sold a bunch of puts like around $20 on it. And that was right before it collapsed to like $8. So I got assigned, you know, and so I had all these, um, Palantir stock, and I was like really pissed about it. And I just left it there. And then, you know, it came back, thank God. But it went down, I think it got down to 8. It was like the lowest it was in like a couple of years ago. So
What company is this?
this is Palantir.
It was down to $8. Jesus
Yeah,
Christ.
a
Went
couple of
down.
years ago.
It was down
Yeah,
for a while. Down there. I've been following it for a couple of years now. So
yeah.
it's down there for a while. It went to 25, and then came back down to 8. Then it shot straight up.
Yeah, then it shot when it got to I think it was just yeah, I think I sold it like at 120 like a while ago, and I was like, screw this, I'm not gonna deal with it anymore.
Yeah.
It's an emotional ride. It really is because
Yeah, exactly.
Yeah.
now all these stock representatives are like, oh yeah, it's overvalued, it's over this, and the sell to earn ratio is so high. It's on there, but then every other week got a new contract, new government contract. Oh, they're going to contract with Europe or new contract with somewhere somebody that it just it's just going up. I mean, they got so much free cash. They ain't going bankrupt anytime soon. They got over, I think, $7 billion of free cash.
Yeah, well, I mean, they don't have to go bankrupt for their stock price to get cut by 90%, you
Yeah,
know?
yeah, no, I understand that, but I'm just
Yeah.
saying, it's yeah, there's just I don't know. I honestly think this is going to be like the next Microsoft because they have just proven it over and over that just they're so efficient. They've boosted productivity and made a lot of stuff way more efficient, you know. And people, and they're like I say, they don't have no sales team, and they're just people just get in contact with by word of mouth of other companies. So I think in the future, in the long run, it'll probably be like another Microsoft where you're gonna have to have it. Everybody's probably gonna have it.
Yeah, well, they're definitely an impressive company, that's for sure.
Oh yeah, that's on there.
Yeah.
But don't get me wrong, I wish I would have had more. I think it's still way overvalued, overpriced too, but it just it's just that there's always some kind of contract coming out, some kind of announcement that they're doing something, and it's
Mm.
like and everybody just rushed to go buy some, you know.
Yeah. Yeah, makes sense. Yeah, we'll see what happens going forward with these guys. I
Yeah.
mean, a lot of these tech names, like a lot of them make me nervous, just their valuations. Like I've been in Google lately and some other ones like that, which are also tech companies, also in AI, but just have like much more reasonable valuations. You know, that's kind of where I've been sitting out lately. But I feel like the whole market just keeps getting hammered across the board.
Yeah, you know what? I think it's just the political atmosphere right now that's causing it. You
I
know,
mean,
there's so much uncertainty in the politics right now. You know,
yeah.
I think that's kind of everybody's kind of like nervous on that because you got
Well, at least the cartels aren't going to come into the US anytime soon, or at least it doesn't seem that way.
yeah, well, oh,
Mm.
well, you were in Mexico during that time, weren't you?
Well, actually, it happened like 3 days after I left, something like that. Because we got back
Oh,
Wednesday night, like late night Wednesday, and then I think that it happened on Saturday
yeah,
is when the event happened. But we weren't there though. We weren't in Puerto Vallarta. I feel like a lot of people they seem to lump Mexico all into one thing, right? And like people that haven't lived
Yeah.
there, they don't like actually know the details about because like everyone's like, yeah, Mexico's unsafe. It's like not really. I mean, like the Cancun, Tulum area is very safe, right? Where Puerto Vallarta is, like, I mean, there's tons of cartel activity around there, right?
Mm.
It's like, you know, the Jalisco region, the Sinaloa region, like those cartels are known to be like very active and like bloodthirsty, crazy people. Like, I don't know if you guys remember last year, they actually like started shooting at like a passenger plane, like the Sinaloa cartel did that, you know? So this is not new for that region, right? So to me, it's actually not even that surprising. But a lot of people seem to think that this is like Mexico's like one thing, you know, like that happens in one part of Mexico, it's happening everywhere, but it's not true. My friend's in Cabo and he's like, what are you talking about? Like nothing's happening here, you know?
yeah. No, I was there. I was in Cozumel on Saturday.
Yeah,
Uh, I was there. No, but you know what? You know what's really funny? When we were landing in Cozumel, you know what landed with us? Freaking a whole bunch of Canadian military ships.
really?
Yeah, they were there boarding with us. I
That's
was like,
interesting.
yeah, I was like, wow. And then I started reading that Canada and Mexico are going to do joint ops and start new trade, international trading together.
Oh, interesting. Cool.
And I
Okay.
was like, yeah, because I when I got there, the ship right next to us was a Canadian military ship, and there's and I was just, hey, what's up, you guys? And they have like yeah, it was pretty interesting. I was like, wow,
Cool.
yeah.
Yeah, I wonder if it has something to do with this cartel as well. You know, maybe they had some intel about that. Like it's
No,
to me,
I
it's kind
don't.
of surprising that they didn't realize there's going to be a backlash. You know, like
No, I'm pretty sure they did. They just risked it. You know,
you know, like
I think of political pressure.
maybe. I mean, what I've been
Yeah,
reading about is like you know these cartels are very difficult to get rid of because you get rid of the head of the cartel, fine. All you're going to do is just create a power vacuum, right? And then now there's going to be factions all warring with each other, and it's just going to cause even more problems, right?
yeah, just like what happened with Iraq.
Yeah.
You get one, you got these small brackets of terrorist groups, and Saddam Hussein would just terrorize everybody. But then once you got rid of him, everybody else just spread out and start doing their own thing. That's why
Yeah.
that's why everybody's all like, why don't we just kill Putin? And I go, are you serious? You guys don't understand? Imagine if you guys took out Putin and all these other KGB and LC break out, and now they all have nukes and nobody has control. That is more
Yeah.
dangerous than Putin. You know what I'm saying? You got to
Yeah, that
realize
makes
the
sense.
whole political aspect of it because smaller groups are more dangerous to control or harder to control than one big guy. You
Yeah, for
know,
sure. That makes sense.
it just I don't know. That yeah, you just gotta watch out for that stuff. That's one thing that I learned in the military. One thing that these small um, regime breaks that they have, they're actually more dangerous than the one consolidated one
Yeah, it
because
makes
really
sense.
don't they really don't have anybody to you know um, get approval from. They just go do whatever they want to do.
Hmm.
You know, but that'd be more dangerous in Russia because you got all these small groups that are gonna have nukes, and they're just not gonna give a damn. You know?
Yeah. Yeah, in a way that's even a worse thing, right?
Yeah, that's way more
Yeah.
dangerous. I mean, you have Saddam Putin right there doing a thing. We don't agree with him all the time, but at least it's all under control for him right now.
Yeah.
You know,
Keeps the
but when it's all
region
broken up
stable.
so much, yeah, region stable. Imagine something that's unstable, just like Iraq. What happened with Iraq?
Yeah. Yeah, or what's happening with the cartels right now, right? You get rid
Yeah,
of the leader and
yeah.
like now all of a sudden there's blowing everything up and I'm sure I doubt it gets any better unless the military comes in and starts like blowing up the headquarters or whatever. But like I
The
don't see
only
that getting any better
cartel,
because then now who's in charge and now they start warring with each other, right? And like,
I
at
mean,
least there was stability before, right?
yeah. Well, I mean, there really wasn't stability, and honestly, it's just that there's certain rules, right? The rules are the cartel doesn't get involved with tourists because tourists bring in so much more money.
Hmm.
You know, that's why all those tourist locations are so safe.
Hmm.
But once they cross into that boundary, then yeah, it starts causing more issues. And I mean the cartels are always going to last because as long as there's a big supply for drugs or a big want for drugs, there's still going to be somebody coming up, no matter what.
Yeah, for sure. Definitely. As long as there's money on the table.
Yeah, it's all about supply and demand, right? Once
Yeah.
you get rid of that, when that demand is so high, anybody's going to rise up to make money to fulfill that demand. That
Yeah.
that's the biggest problem is that demand.
Yeah, for sure.
No matter what, it can be cartels, it can be the mob, it can be anybody. Anybody's going to raise up to make money because of the high demand. Until
Yeah.
we get rid of that demand, none of this is going away.
Yeah. All these kids need to stop doing drugs.
Honestly, you know what they really need to do, and honestly, what
Yeah.
I truly believe, and this is my 2 cents, right? I think what they need to do, honestly, is kind of remove a lot of these academic crap that they have, and actually bring in strong family values. Strong family courses together to reinforce, to state, to prevail a strong family foundation because that's the root of all issue. Because most people that have strong family foundations don't go into drugs, don't do this stuff, you know. And that honestly, for me, that's the root problem. And the numbers kind of agree with me because almost what 76% to 80% of all criminals and drug users come from single family homes. So the numbers don't lie.
Yeah. Well, it depends on the drugs. I mean, like Wall Street is known for like cocaine and all
Yeah,
that, right?
yeah, I know, but cocaine. But I mean, most of those users are still from single family. You know, they
Yeah,
have.
but that could also be, that could not just be the single family, but the fact that it's likely that they're kind of in the lower, income group. So,
Because
They're related. That's
you
for
yeah.
know,
sure.
even that's not even on there because even in some parts, let's just say everybody's all, oh, I'm scared of Mexico and all this. You go to some areas in Mexico with our low income, they all have strong family values. They're all very hardworking. No drugs, no homeless, no alcoholism, none. And we're talking about big neighborhoods too. So I mean, I don't think the foundation on there. I think the root is still the family values, the family strength. It's probably the root cause. For me, from what I've seen, because I've been around the world, and I've seen like all these parts, right? And every time I go into to these countries that have where the families have strong foundations, and everybody has strong like foundation together, and they do something together, crime rate is extremely low. People can be trusted. and it's just like way different. And you can go to other rich areas and stuff, and everybody has high class areas. Everybody has their own cars and all this stuff, but there's no family foundation. There's still a lot of drug use and suicide, quite a bit.
Hmm.
Yeah, but you have to still have to ask the question as to why the family broke up, right? I mean, so that's kind of the
Yeah,
fundamental.
that's what I'm saying. That's what I was saying. That's why I was saying my 2 cents, right? It's like let's get rid of some of the academic crap that we don't need, that we teach a lot of crap that's not needed, and bring back a lot of family values into the schools and with the families. You know what I'm saying? That's just my 2 cents.
Hmm. Actually, I don't know what you're saying, but I wish the schools would concentrate more on like math and science, right?
Well, here's the thing: you can only do so much in math and science, right? Because math and science is still add, subtract, multiply, and divide, and science is also much. I mean, it's also much, but I mean, there's some courses that are completely useless. Like there's genealogy. There's a like my daughter's in classes right now. I'm like, this stuff is completely useless. She'll never use it in life. You know?
Yeah, the
She's
quite I mean, but the point is that you want, I mean, the way I see education is that you teach people to think. And if you get people to think for themselves and think critically, that's exactly what education should be. It's not whether you're going to use it ever, it's whether
right, but I think
you
there's only
can.
so much you can do when you give the education to think. Like for example, right? We can only I went to the highest math levels you can go, right? Um, didn't do me any good. You know,
Mm.
what really taught me to go on to is actually what's real life events happening and actually having confrontation and conversation with other people and seeing other things and realizing and actually having the ability to listen and understand what's going on, actually gave me way more education than what I learned in college.
Well, yeah, but that's thinking, right? I mean,
Yeah, I think that's what I'm saying though. It's not something that college gave me. It's something that kind of my environment gave me.
well, yeah, but I mean, well, I mean, what all I'm saying is that if you go to a, you know, I went to the University of Chicago, for instance, and basically the whole deal there is, you think for yourself and you read, anything you read, it's an original source. It's not, a watered down, um, book or something, right? There's not cliff notes um, for things. So it doesn't matter that you have to learn how to write and express arguments, right? And that's thinking. That's the whole. So that's what people say, well, gee whiz, um, what do do you ever use what you learned there? Well, I mean, and the thing that you learn is how to think and think critically. That's that's my that's the whole that's the whole
Yeah,
reason for the
and
school.
that's great. But I mean, honestly, you think about it, right? Some of the greatest inventors in life, in general, didn't really learn from books. They learned from experiments on themselves, or doing it themselves. Tesla's a great example. Kirchhoff is another great one. Kirchhoff only did labs all day, just make stuff up, because he had some creativity and that's what they did. That's the way they learned the most. You know, they just dug into it. They didn't really go into books and stuff. They just saw the outcome. They did a test and did the outcome and all this. I mean, I'm trying to think of a great mind or a great achiever that has done something extraordinary that was did it from the books. And I can't think of one off the top of my head right now. There could
Well,
be. Don't get me wrong.
but the
There could
thing,
be. I just
I don't
can't
know
think
what
of
you
one.
mean. I mean, we shouldn't get into a philosophical argument, but
Yeah, yeah, I agree. I agree.
the way the way I, I mean, the way I see it is that, you read a bunch of, books and then it like, I mean, this is what happens with me. It sits around in my head and they kind of combine in a nonlinear manner and something new pops out of it, that's the way, and whether you do that in school or you do it in, you know, wherever you are, that's the way I think of creativity is it's taking disparate things, and making them work in a, in a different environment. That's so.
It could be. I'm not saying it's not. I'm just saying creativity is something that comes out of nothing, right? So, I mean, it's an idea that came from somewhere. You know, you can find it in books anywhere. It can be anything. You know, it just I from my history research that I've done, I just haven't seen anybody that says, "Oh yeah, I've done all this book stuff and I got this from doing this from the book." You know, usually most of them were done by accidents. Most great discoveries were done by accident. You know, that's why I couldn't think of anybody on top of my list. And I'm not saying
Well,
I'm
I would
all
sort of just
right,
like,
but it could be 50-50 right there.
Anybody
yeah.
got any good bot ideas tonight?
Yeah, let me pull up our poll here. Here's a poll from last week, or I should say from 2 weeks ago. Let me pull this up here. Okay, share my screen. So here are the ideas that we had from last week, or like I said, 2 weeks ago, last session. The Alpha Pix option strategy is still on the board, right? I think we actually started running that. Maybe we could look into that, the Alpha Pix option strategy. So to whoever doesn't remember, Alpha Pix is basically they have some really good stock picks, right? And we can automate that using options as well, not just buying the stocks. But I think the issue that we had last time was the fact that you need to have a fairly large account for this. So we need to find like a way around that. Then we have add AI agentic capabilities to Lumibot. All right, I still think that's a really cool thing to do, like the Alpha Arena type thing. Just allowing the bot to like fully trade on its own as opposed to like giving it defined things to do. This would like actually just let it like fully trade on its own, like whatever the AI actually thinks. We have a short earnings volatility strategy in here that Worth brought up back in the day. We could watch the YouTube video. There's a link there. We could do a Twitter trading bot, which can like copy people on Twitter. We could do prediction markets, which is Polymarket, Kalshi, Predicted, that sort of thing. We could work on an SPX trading strategy. I know a bunch of you guys are working on that. So we can kind of get into that and see what we do with the SPX strategy. We use TradingView to create a futures strategy, right? Which we actually did a few times already. But I think we could leave it on there because it's been working out quite well using TradingView. So if you guys want to jump into that again, we could do that. We could keep working on the poor man's covered call. Maurizio, I saw that you've been running that. It actually seems to have recovered a bit. I don't know if you ran a new one or not, but how's that coming along for you?
I'm not getting the results I want to get, so I'm still working on it.
Okay.
Yeah.
Like in back testing or like live trading?
Both.
Mm.
You know what? The trade bot that we did 2 weeks ago, it crashed, so it didn't really trade.
Which bot is that?
The one that we did, the poor man's covered call.
It crashed.
Yeah, it did trade.
Let me
We put
see
it on the
here.
marketplace.
Let me see here. Spot. So which one is this? This poor man's covered call?
Yeah, that one. Is that the one? Is it making trade now? I haven't seen it yet.
This one seems like it has been trading. I don't know if this is the one, but hasn't made any money, but it has been trading. Yeah, I'm actually running this one here. There we go.
Yeah, that's the one. Okay.
Yeah, so it looks like it's been trading. Did it crash for you?
On mine it crashed, but I'm gonna try to do something else with it.
Okay.
All right.
Yeah, it seems like it's still running here because it's still reporting data February
Yeah.
24th. It's reporting data February 21st, 22nd. So it's not making money, but it does seem to still be running, at least for me. So maybe there's something with the way that you set it up, or maybe you made some changes to it. I don't know.
Yeah, I tweaked some stuff onto it. I'm trying doing some more.
Okay.
I'm still mess with it.
Okay. Cool. All right. Let me send this to one of our devs too. Do, do, do. Let's send this to one of our developers. Still having issues with the backtest data on the marketplace page. I'm gonna send this over to him. For some reason, these results keep disappearing on us. Trying to figure out where this bug is coming from. Send them my logs as well. Yeah. Yeah, this seems to be working for me. It is trading. It's not making money, but it is trading. Right? Not that surprising. I mean, the whole market's just been really getting in the dumps lately. Yeah, so that's the poor man's covered call.
Yeah, but I was hoping that at least the hedge would be kicking in. That's where I'm a little disappointed at.
What was the hedge again? What did you use as a hedge?
Kicking in VXX and SQQQ.
Okay. Yeah, I mean SQQQ. I've tried to use that in a bunch of different strategies. I always found it very difficult to make money with SQQQ. Like you got to be like I've said this before. Like shorting, if you guys can make an algorithm that makes money shorting stocks, God bless you, because I have, and I still haven't been able to crack that code. You know, um, and VXX. I guess that makes money when the VIX goes up, right? Is that what it is? Yeah. Yeah, that sounds like it would potentially make more money. Yeah, I don't know. If you guys want, we could explore that a bit further today. We could get deeper into that, right? We also have the future scalping bot for the S&P 500. I think this is what we were working on last time. Is we're working on like a scalping bot that was doing momentum, and I actually think we got some pretty decent results from it, if I remember correctly. Let me see here. I'm gonna log in. Let's see. Alpha Pix. Oh, this is the Alpha Pix poor man's covered call. Maybe this is the one that you mean, that if you mean this crashed.
Oh
Maybe
yeah,
that's
that
the
one
one.
is. Yeah, that's the one.
Yeah. And then the Ledge MNQ strategy.
I knew it was
I
one of
think,
them.
yeah, maybe this is a while ago.
Yeah, I knew it was one of them, but I just like I left last week and I barely got home. So
Yeah.
I took note of it, but I don't remember which one.
Let's see. This one, is it still running? It seems to still be running. Poor man's covered call. The Alpha Pix, poor man's covered call.
Yeah,
But again, losing money, right?
yeah, I did.
Yeah. It owns Kinross Gold. Yeah, it makes sense. A lot of these just got hammered recently. Whether it's trading correctly or not, I don't know. We could ask. I could ask the AI and say, why is this not moving properly? Um, is this trading correctly? Um, it seems to own some strange positions. Did it exit the way it was supposed to or not? You sure this is trading properly? Okay, we'll ask it that question. We'll see what we get from that. So yeah, so if you guys want to keep working on this, we could definitely do that. I guess is the alpha picks option strategy is really what this is, but they're related, right? Poor man's covered call and the alpha picks option strategy are related because the way that we're able to trade all these different alpha picks things is by using the poor man's covered call. Otherwise, you'd have to have a really big account to do that. Um, yeah, then we have the future scalping bot, which I guess we did the week prior. Then we have the NQ, Paul's second entry. I'm going to remove that because I was talking to him about it and he doesn't seem too convinced with it either. So I'm going to remove that. And then there's the futures momentum bot that we could work on as well. Anything else that you guys would want to add to the list or modify on the list or have questions about? Okay, cool. I think we got a pretty strong list here. Maurizio, I remember we talked about the wheel strategy a while ago too. Someone brought this up to me the other day. If you guys want to add that to the list, I can add that in as well, the wheel strategy. I've been hearing some pretty good things about it, you know, that this like options wheel strategy could actually make a lot of sense. So if you guys want to work on that, we could do that as well.
Oh, yeah. I mean, either way, that was on my list to do, but like I said, I'm trying to master this one to get it real good. So it's
Yeah, it makes sense. Yeah, I mean, we could work on it here too, right? It doesn't have to be, you know, you yourself working on it. Like we can actually try to do the wheel strategy. I've been hearing like really good things about it lately. So if you guys are interested, we can kind of go down that path. I think what you do is you sell cash secured puts, and then if you get called on them, you then hold on to the assigned shares and then do covered calls on them.
that's
Eh,
correct.
Yeah, and
Right.
then if that and then there's something that triggers that gets you back into cash secured puts and you kind of just go that like in a wheel
Yeah,
like
that's
that,
it.
right? I think
Yeah,
that's how it
you
works, right?
yeah, you had one option. You can do a covered call on it on the way momentum, and if it's going down, basically your momentum, you're gonna sell the cash card put. So
Yeah, makes
that's it.
sense.
Yeah.
Yeah, I've been hearing some good stuff about it. So if you guys want to try that, I'd be interested in trying out a wheel strategy too.
Yeah, that would be good.
Yeah.
Yeah, I would definitely like to do that.
Yeah. Okay. Yeah, we could definitely do that. You know, it's something we've talked about a bunch, but we never actually did it. And it's doesn't seem like a very hard thing to do either, you know? So I feel like we
Yeah,
can knock that out pretty quickly and see what happens, right?
yeah, it'd be easy. Would it be good to do it on on an index or on a basket of stocks? Because um, you know, the problem with the strategy is that, I mean, let's say you were doing it on like IBM the other day. That I mean, that was a once in a 20, I mean, that was the worst drop that happened in the last 20 years yesterday, right? So if you were doing the wheel on that, you would be, you would definitely have gotten assigned. And I mean, well, when, eventually, and
Mm.
then what do you do next, right? So anyway, that's just the question. I mean, we could
Pick,
address that.
pick stocks that are in a strong sector and above the 200-day moving average and make sure they've got some upward momentum. Can't stop IBM from bad news, but
Right, right.
certainly you can hedge your bet a little bit by getting in the right kind of stocks that are moving the right direction for you on a short term, long term, whatever you decide, whatever entrance you have. I do that a lot with actually doing it on all the AI power companies.
Oh,
The different stocks there. So a bunch of different stock tickers that seem to they get hit, but they but still working on them. So It's shoot. Let's see. It's stuff like IONQ. I do some Marvell MP. What's the S? Let's see. SMR, SMCI. A bunch of those trying to use the covered call. I should say the kind of a little bit of the wheel strategy, but more of just jumping in and buying the stock and selling covered calls on it.
Mm.
There's definitely a good strategy there. It'd be interesting to see if we could automate it into something interesting, more interesting.
Yeah.
Yeah. Yeah.
Well,
Makes
I
sense to
mean,
me.
one thought is you could use instead of using the whole index, you could use the sector ETFs, right? So, um, for instance, there's the sector, like for what you were talking about, could, and that would be kind of cool actually, because I think there's like 10 different sectors, right, that have ETFs, and that would be kind of an easy thing to give a try. That would be kind of fun.
Yeah, we could do something like that. We could do like the whole 200-day moving average thing on top of that. Like
Yeah,
we
yeah,
could we could test a bunch of stuff.
yeah, or just do that, or just do, yeah, I mean, do a comparison of the two, right?
Yeah, makes sense.
That's yeah, cool.
Okay. All right. So I got that on the list too, the wheel strategy. And I asked AI, and it seems like this Alpha Pix poor man's covered call is doing what it's supposed to do, right? This is what I got back. Investigated. Yeah, the bot is trading correctly and successfully following the new Alpha Pix dynamic universe logic we implemented in version 70. The positions you're seeing, SSRM, EZPW, and KGC, are not errors. They're top ranked stop strong buy picks pulled directly from the Alpha Pix database. These symbols were automatically selected because they were the most recent strong buy additions to the AlphaPix list. The bot is doing exactly what it was told, focusing on capital on the freshest, highest conviction ideas. Yeah, I mean, it makes sense. Let me quickly check Alpha Pix. Where's the I need to log in. Um, it's not exactly the latest ones. So I could say I'm not sure that's true. These are the latest picks. Yeah, Powell's been on this list for quite some time. T-Mobile. Yeah, let's see what it says about this. Okay, cool. Yeah, the AI seems to think it's working pretty well, but I mean, we can investigate that a little further. But it definitely doesn't seem to be crashing. Like Maurizio, if it's crashing for you, then I think there's something else going on. Cool. Anything else you guys would want to add to the list or change or have questions about or anything like that? Okay. All right. So I'm going to save this. I'm going to send it out. You guys can go ahead and vote. All right. We'll take a quick break as well. I'll see you guys back here in about 15 minutes. All right. Okay. See you guys soon. Right. Hey guys, how's it going? Okay, there's still one more person who hasn't voted, but we definitely have a winner already. So if you're that person who hasn't voted, please go ahead and cast your vote. I'll give you a little bit of time. But we definitely so far seem to have a winner. So I'll give you a little bit of time. I also got something back here. Okay, so it looks like it did find a bug with this alpha pix. You're right to be suspicious. I found a bug in how the bot was reading the alpha pix data. Wrong date field. The bot was looking for the fields named date added or updated, but your database uses picked. I don't know if that's true. Let me actually take a look at this really quickly. Yeah, why the hell was it using? Yeah, it's true. It does use picked. Sorting failure because the bot couldn't find the date field. The sorting logic failed. Instead of picking the 10 most recent strong buys, it was likely just picking the first 10 items returned by the API, which happened to be the oldest ones from 2025. Okay, that makes sense. Date format in your list required a more flexible parser than what was originally in the code. Okay. I implemented. Okay, so let me do a quick fix on this first, just to make sure we have this properly. And then we can relaunch this alpha pix because this is actually very good that you brought this up, Maurizio. It doesn't seem like it crashed, but it does seem like it did have a bit of an issue. So let's get that sorted really quickly. I'm gonna give it the stock alpha pix. Okay, are you sure nothing else is wrong here either? Here's a different strategy that also pulls from the same database. Maybe there's some other stuff you could learn from this as well, right? I'm surprised that you missed this, right? But maybe there's something else you could learn from this strategy. I don't want you to actually copy this strategy, but this is another strategy that uses the same database and same API calls. So maybe you could learn something from this too. Let's see if it comes up with anything else here. See if we could come up with anything else. What else does it say here? It said with fixed robust state parsing, strict recency sorting, sorts a strong by list by descending order by date. So GM, it would now be at the top of the priority list. Okay. Then the Y logs, I add a detailed log for every symbol in the universe. If the bot skips a recent pick like GM, it will now tell you exactly why in the logs. Okay, good. And once you deploy this version, the bot will realize SSRM and EasyPW are no longer the top 10 recent. It will automatically trigger a graceful exit for those positions to free up capital for newer picks. Okay, hopefully it does that. Okay, first off, it seems version is already doing the heavy lifting by filtering strong by ratings, sorting by recency. Use symbol rating and holding period. My code creator uses symbol rating and picked, which is fine for sorting. They use holding percent for weighting while I'm using the flat per symbol fraction. Okay, that makes sense. Here's intent. They want to top 5 to 10 symbols based on recency. My existing graceful exit logic already handles this perfectly. I'm noting the hold percent from the user's code because it's interesting. I use it now for an additional metric for the universe, eventually used for sizing in the future. So I'll stick to the current allocation logic for now as it's safer for options. The major takeaway is error handling, use code logs, full API text. That's brilliant for debugging, okay. V72 will definitely incorporate enhanced API logging, good. Including full response text to help the user troubleshoot any future API issues. Finally, I'll be implementing a clean universe sync. I'll double check. Okay, let's see. So what did it do here? Enhanced API debugging, that's good. Robust symbol handling, the bot now automatically cleans up every symbol it gets from the API, stripping out extra spaces and making sure everything is in uppercase, so there are no mismatched symbol errors. Locked in picked field, the primary way bot sorts. Good. Holding percent awareness. The bot now logs the holding percent for each of the top 10 picks. This lets you see exactly how much conviction the Alpha Picks database has for each stock. And then automatic recency exits. This is the big one. If the stock you're holding falls out of that top 10 recent list, the bot will now realize it's no longer a priority and trigger a graceful exit. Okay, cool. So it sounds all like a good idea. Let me run this thing. So we could restart this strategy. And then there's still one person who hasn't voted. So if you want to vote, you can use that opportunity now. I'm going to stop this bot. I feel like we need better stuff around like what this is running, what broker and all that. Let's see, bot spot 5. I think that's what it was. Five. There you go. Alpha picks, poor man's covered call. Okay. So let's relaunch this. Connect your account. I'm gonna disconnect this and then reconnect it again. Oh, paper, Alpha picks, poor man's covered calls. Okay, we'll relaunch this. Okay, cool. So thanks for bringing that up, Mauricio. So it sounds like we had a little bit of a bug there. So I'm glad that we got a chance to fix that. So maybe we'll actually perform better now. Because if the pick was supposed to be, just out of curiosity, I'm wondering how well these picks are doing. So GM, Daikon is a hold now. Newmont. I mean, these are all doing quite well. So NEM, let's see, how's it performed? Let's say the past month, kind of flat. GM, that's surprising that they want to invest in General Motors. They're also kind of flat. The whole market's just been not doing very well. And Barrick Gold, they took a big hit, but then how are they doing since? Barrick actually owned them too, and when there's that big drop in the price of gold, this stock dropped pretty hard. But this is actually doing pretty well the past little bit. If anything, Barrick Gold maybe would have made some money, but it really seems quite difficult to pick good stocks in this environment. Okay, cool. Let me end the survey here. I'll share the results with you guys. So here's what you guys picked to build. So pretty clear that you guys want to work on the wheel strategy. All right, so let's talk about that. So we talked about a few different wheel strategies. And actually, I guess we updated Poor Man's Covered Call a bit anyways. That was the second one that came in, and I guess, we just did a little bit of work on that right now in a sense, right? But let's talk about the wheel strategy, right? So why don't I do this? I'll get our AI to start researching this a bit. Can you tell me about the wheel strategy and how you recommend doing it? We've thought about doing this on an index or maybe, the Mag 7, the Magnificent 7, or maybe on different industry ETFs. What do you think about the wheel strategy? What is it good for? How does it work exactly? And let's walk through all the details there. And what are some gotchas potentially with wheel strategy that we might want to pay attention to as well? Please do your research on this, do some searching, and get back to me with whatever you find.
So one thing that I've researched, some people say like the best time to do the wheel strategy is with the least amount of volatility. You know, that's one thing. So whatever stock has the least amount of volatility is always like, it's for sure win. Well, at least a 90% win.
Yeah, that makes sense.
Because it's not you're not gonna get the call on your cover call. You're not gonna get the point on your cash secured put. So it's within that same range. Because you're supposed to do within the Bollinger Bands. You do your call for the top and do your put for the bottom. But,
Okay, interesting.
yeah, that's the range that they do it for.
Well, let's see what they have here. So, wheel strategy is one of the most popular ways to trade because it's getting paid to wait. It's a cycle where you collect cash from waiting to buy a stock and then collect more cash while waiting to sell it. Here's a simple breakdown of how it works, what to watch out for, and how your ideas or for indices or Mag 7 stack up. Okay, how the wheel works, the two-step cycle. Think of it like a wheel that keeps turning. Step one, sell a cash secured put. You pick a stock you like and agree to buy 100 shares if the stock drops below a certain price. The market pays you cash a premium just for making this promise. If the price stays up, you keep the cash and do it again next month. If the price drops, you use your cash to buy the 100 shares. Now you move to step two. Step two, okay, so if the price stays up, you keep the cash and do it again next month. If the price drops, use your cash to buy the 100 shares. Now you move to step two. So I guess the put options would basically force you to buy them if it drops enough, right? And then you sell a covered call. Now that you own the shares, you agree to sell them if the price goes up to a certain level. The market pays you cash again for this promise. If the price stays low, you keep the shares and the cash, then do it again next month. If the price goes up, you sell the shares, hopefully for a profit, and go back to step one. What is it good for? Extra income is great for generating rent on your money. Buying at a discount if you have to buy the stock. The cash you collected earlier makes your real price lower. High win rate. You can make money even if the stock just stays flat. It's interesting. That could actually work pretty well in this market. So far we've been going sideways. If you believe in what Ray Dalio is saying, that might continue for a while, like years. So it sounds like an interesting strategy. The gotchas, what to watch out for, the big drop. If the stock crashes like a 20% drop, you're forced to buy it at a higher price, at the higher price you promised. You might be stuck holding a losing stock for a long time. That makes sense. Missing the moon, if the stock skyrockets, you have to sell it as at your promised price. You keep your profit, but you miss out on the to moon gains. Makes sense. And taxes, since you're collecting cash frequency, you may have to pay taxes on those gains every year. Okay, that makes sense. And then Mag 7 versus indices versus ETFs. Mag 7, high paydays. These stocks move a lot, so people pay you way more cash premiums to trade them. Okay. Higher risk. One bad earnings report can cause a huge drop, leaving you stuck with the shares. That does make sense. They are quite volatile. Broad indices are safety first. It's almost impossible for top 500 companies to go to zero. Very steady and reliable. The trade-off is lower paydays because they are safer. The cash you collect is much smaller than with individual stocks. Okay. And then industry ETFs, the middle ground, you get more juice than a broad index, but more safety than a single stock. The trade-off is sector slumps. If that specific industry, like energy, goes out of style, you could be stuck for a while. Okay, so recommendations, if you want to study and safe, start with the index. If you want more excitement and higher income, go with the Max 7. But if but you have to be okay with owning those stocks if the market dips, which I think in most cases we probably would want. What do you think? Does one of those sound like the right fit for a test? Okay. So what do you guys think? What are your guys' thoughts about this? My initial thought is just to start with a broad index, right? To kind of keep it simple, at least at first.
Yeah.
Uh,
Um,
Can we find
I
out like
actually,
a list of which? I'm sorry, go ahead.
I actually like the sector indices. Um, you know, there's I forget what they're called, but you know, they split the S&P up into like 10 different categories. Um, and so
well, how do you pick them? Like if you were to do the industries, right? Do you pick just the industries that are up right now, or do you do all of them all the time, or like how would you go about doing that?
I think we would do, well, I mean, well, do each of them individually and see which one performs the best. I don't know.
Oh, so you wouldn't have a strategy that trades all of them at once, you just pick one of them.
Well, well, no, I mean, you do them all, and you see how they perform with respect to each other, right? I mean, the data set for those, I mean, those ETFs go back many years, right?
Yeah.
So, um, might be I mean, it's kind of intense computationally, but the reason I like it is because a little better than just the broad index is that, you know, it splits the index up, you know, into components, and you can see, you know, you can see which ones work better in what in which environment, right? So,
Yeah, I mean, but at the same token, then you also introduce an extra problem, right? Which is which one of them are you buying, right? Like, are you because like if you're just buying the index, right? Then you could just say, okay, we're doing the wheel
Yeah.
strategy, we're making money off that. But if you're doing the industry, it's like, well, that's like a whole additional variable, right? Like, what industry are we buying and why and when, you know? That's kind of my thoughts. Is it just introduces a complexity that I'm not convinced is like a good idea.
Hey,
Maybe it
well,
is.
I think it might work better because I mean, I don't know this for sure, but we could find out. But I would expect the sectors to have more volatility than the overall index, and so you'd get a more you know, more juice out of it uh, as you're doing it.
Okay,
And
that's interesting.
Don't
my
forget you're going to get assigned sometime down the road. It will happen.
right,
And if
yeah.
it assigns you the stock, you're going to have a good chunk of money. $100 stock, you're going to have $10,000 to hold the
So my
stock. So
right,
so my safe haven
you have to
was
hold 100 shares of stock. So you've got to have the money. If you get assigned, you got to have the legs in the account to be able to hold the stock.
I mean, $10,000 is putting it lightly. For the SPY, if you got assigned, you'd need $70,000.
Exactly.
Yeah.
yeah. So my safe haven was going to be silver SLV because it's still like at 70, you know. So that's why that was my mindset to use since it was going on an upward trend to use it on that one. And if it gets assigned, I wouldn't mind, you know, because I can wait it out. But that was my mindset on there because it's been going on a upward trend. Well, once it went down after that panic for when what's his name? I forgot his name, but whoever the Federal Reserve was going to be, definitely, popped down. But other than that, it was an uptrend. But silver has been pretty volatile until before that. It's always been staying. If you look at before the couple months, it was always around the 34, 30 kind of range. But I don't know. That's what I was looking at first a while ago. But these last couple of weeks has kind of killed my momentum on it.
I mean, yeah, that's one hell of a drop. You can see on the chart like very visibly, right? Went from 105 down to 75 in like a
Yeah.
day. That's
Right.
again, I think that was the biggest drop ever in all of history for silver.
Yeah, and that's what I was saying. That's the day that whole market panicked with the when they announced the federal chair.
Yeah.
Which
Yeah,
I don't know
exactly.
why that would even do that. Al cine pasadito.
Well, I mean, you can see here too, like, I mean, part of it too is just like look at the run up before that crash, right?
Oh yeah.
It just shot up like crazy. So it's kind of bound for correction, right? Like whenever something shoots up that much, that fast,
Yeah,
like
it
it
makes sense.
starts to get very wobbly, right?
Mhm. Yeah. Why don't you look up type in SPX sector ETFs and you'll find there's a I just did it on my computer.
So select sectors. See, so there you go. We have materials, energy, healthcare, consumer staples, consumer discretionary, financial select, and tech select. So that's one, two, three, four, five, eight of them.
Yeah.
So I mean, if you're trading all eight, right? Like, w would we just trade one at a time? Like, I mean, you'd have to have a pretty big account to trade all eight at the same time, right? For starters.
Well, but
Right.
these are not, I mean, uh I don't know, it looks like they're all around $100, right? I mean, roughly.
I mean, these look like they're all trading around 1,700, 1,130, if I'm
Oh,
reading it correctly.
I'm reading. I'm looking at
Yeah,
the I'm looking at the state. What are those? What are this? Oh, these are big. Yeah, okay.
Yeah.
I was looking at the spider ETFs. They're like tenth the size.
Oh yeah, they're a lot smaller.
Yeah.
Let's see. We also have industries.
Oh yeah, I see.
These are all quite big.
Hmm.
I mean, these are probably the indexes, not the
Yeah,
ETF.
those are the index. I was talking about
Yeah.
the yeah.
Yeah, there we
Okay.
go. The
Yeah,
spider.
that's what I'm talking about. Right.
Okay. Yeah, these are priced much more reasonably. Yeah.
Yeah, yeah.
Yeah, XLE, XLF. I've actually held a couple of these before.
Mm.
1 year returns. Industry select. Industrial has been doing the best. That makes sense. It's been crushing it over the past year. Technology's still up a lot. Energy is up a lot. Materials, that makes sense. At the bottom is real estate, just getting annihilated. I've actually been thinking about buying some real estate lately. There's in Canada, in the Toronto area, this is the biggest drop in real estate prices in all of history in Canada. I've
Oh,
actually been looking at like buying some stuff now. Actually seems like a good idea. I like buying when things are cheap.
yeah.
But yeah, I mean, so if we were to trade these, I mean, I don't think, I mean, you'd have to have a pretty big portfolio to be able to buy all of these at the same time, right? Like just back of the envelope math. This is 17,000 if you get assigned. This is 14,000 if you get assigned. 11,000, 11,000. This is just between these is like what, 50, 60, $70,000 at least, right? So like you need to have a pretty big account to trade
Yeah,
this.
well, I mean, I know that if you had portfolio margin, you would need roughly 20% of the to um for the margin requirement. So
Okay.
it's much better than what do they call it, Reg T, which I guess is what the if the normal thing is. So if
Hmm.
you can have portfolio margin on your account, it work, it, you get a better I mean, you don't need as much margin.
Yeah, that makes sense. Okay. What do you guys think? How would you trade this?
Well, my feeling is that that you look at all of them, I mean, you don't necessarily trade them all, right? But you see how they perform relative to each other. And you make some kind of an objective way to pick, uh, pick one or the other to,
Right. So that's where I kind of see a lot of the issue here if we're doing something like that, because if you do have to pick one or the other, then now you're assuming your picking mechanism is good, right? And I think we would probably want to do some research around that first to see what is even a good picking mechanism, right? Because like what do you pick? Do you pick the ones that are performing the best, right? That could say that you're buying at the top, you know? Or are you picking the ones that are performing the worst? Right? Like I mean, like that in itself is a big variable, right? Like outside of even like the wheel strategy, right? Like your wheel strategy could be working very well, but you're just because you're picking the wrong industries, you could be losing money, right? Like that's kind of the biggest issue I see here with doing this
yeah,
within.
actually, what I mean, maybe the bot can do it easily, but if we knew what the correlation matrix was between these things, I mean, if they're all just essentially correlated, then it doesn't, then I don't think it makes all that much sense, right? But if they're not that correlated, then you get some diversification.
Well,
That's
there's
the,
definitely some level of correlation,
well,
right?
of course there is, yeah, because
Yeah.
they're,
Yeah, you can kind of ballpark it
I
here
mean,
too.
but
Like, I mean,
yeah, but I mean, if you do all of them, then essentially what you're getting is the index, right? But
mhm,
the question I have is how much more, I mean, I think you're going to get more juice out of this than you are out of the index, because generally the index has lower volatility than the individual sectors, right?
right.
So, um, but in terms of ease of analysis, it would be uh, doing just the index is the easiest thing to do, right?
Yeah, I mean that's kind of what I'm thinking right now, at least for V1 to do just
Mhm.
the index, right? And then kind of go from there, right? That's kind of what I'm thinking, right? Just strictly from like a technical standpoint, I feel like that's just the easiest thing. Let's just get that done and get that working, right? And then
Yeah.
we can start experimenting with different things. Maybe that makes sense. What do you think
Yeah.
about that?
Well, maybe do the SPX, the NASDAQ, and the Russell, and then you have those are and what's cool about the Russell is it's completely, there's no stocks in the Russell that are in the other indices. So it's kind of orthogonal and see
Yeah,
how they work with respect to each other.
that makes sense. You can even add the Dow in there. Like the Dow's been
Yeah,
doing pretty
yeah,
well lately.
yeah.
Okay. What do the rest of you guys think?
Thinking about being assigned kind of loses my enthusiasm. So I've been there, and once you end up with the stock, you want to hope that you like it, that you're willing to hold it, and that it pays some dividends while you are holding it. So that thinking back that way, and I don't think you can buy SPX. I think you're gonna have to buy SPY, but I don't think you can buy shares of SPX. So I don't know, a little more difficult
Yeah,
than I originally thought.
yeah. Well, SPX is cash settled, but yeah, so I mean, you'd have to do the ETFs, SPY, you know, IWM and QQQ. I think that would be, yeah, I think that would work.
Yeah. Okay. All right. So why don't we give that a try?
The SPY's trading at 687, so that means you get assigned your what, $60,000 on 100 shares.
Yeah. That's with one option.
Yeah, that's ouch.
Yeah. It's definitely a lot.
Is there a mini version uh, of that? Because there's a mini SPX, right? Which I guess is the same as the SPY.
That's a good question. Is there a mini version of the SPY ETF? There's XSP, that I know, that's the index. E-mini futures. Nothing little. Yeah, let's see. Let's ask AI. SPLG. Lower share price. Let's see. SPLG. Okay.
I saw SPYM pop up when you started, Rob. I don't know what that was, but it popped up on your screen when you first put it up.
Oh, yeah. SPLM. See, this doesn't seem right. That's London. Let's go. SPLG. That doesn't even seem to be coming up. SPLM. Century Petroleum. So it looks like.
SPYM.
SPYM.
Yeah.
YM. Oh, maybe.
Oh, that would be reasonable. $80. Yeah,
Yeah. That actually makes sense.
right.
How long has it been around for? Been around for a while, actually. 2021.
Long
Looks like
time.
it started in 2005. It's been around for quite a while.
Yeah. I mean, the question is, I'm sure there are options on it, but that would be something to look at.
Yeah, let's see. Let's check Yahoo Finance. It might be less liquid, if anything.
Yeah.
It's not bad. Open interest. It's fairly high. This is expiring when? On March 20th. The expirations don't happen as often,
Yeah.
but that might
Well,
not be that important.
yeah. Well, you probably want the month, as long as they're each month. June. Oh, theirs looks like 3 months, but
Yeah, but I bet you by the time April comes around,
yeah. Right.
May will probably come, you know?
Right.
Right? It's just because it's not showing it now doesn't mean it won't be there, right?
Hmm.
I mean, it sounds like a good idea to me.
Yeah.
The spreads don't seem that crazy. $5 spread around the
Yeah.
money. There's a 1 penny spread, 4 cents. This is a pretty big spread right here. That's not too bad. Okay. Yeah, we could do this. I think it's pretty interesting. Okay. So you guys would want to do SPYM and then let's see. RUT, Russell. That's the index. What's
IWM, that's ETF, but
IWM is ETF? Yeah, that's right.
it's also big. So if there's a
Yeah.
small, a mini IWM, I don't know. I'm sure there is, but
Is there a smaller version of the IWM ETF? VTWO. Okay. SPSM. Let's go here. Yeah, VTWO is about half the price. Also much lower expense ratio too.
hmm.
So why don't we do this? Why don't we start with one symbol just from a technical perspective, just to kind of get the ball moving. Well, this SPLG is much lower expense ratio too. All these big ETFs, like there seems to be like some good alternatives to them cost wise. What was one? SPYM. Do we have the expense ratio here? No, we do not. Where's that SPLG? We weren't able to find that, right? SPLG. Yeah. Okay. So SPYM. So do you guys want to try making a wheel strategy around SPYM?
Yeah.
Yeah, let's make a wheel strategy around SPYM. And I think we will eventually add more symbols. So make sure it's set up to be able to do more than one symbol at a time from the beginning. For now, to keep it simple, we will only use SPYM, but eventually plan to add others. There we go. The other thing is, I don't think Lumibot has the ability to do share assignment either. So we might have to add that capability into Lumibot as well.
Expense ratio in SPYM is 0.02%. Amazing.
Yeah, it's very good. It's definitely better than SPY. Yeah, I think SPY is like 0.08 or something like that.
Point zero nine.
Yeah, there you go. A lot cheaper. Okay, multi-symbol wheel. Okay, so see, it sounds like a great plan. I've got your multi-symbol wheel strategy and it's good to go. Loops through a list of symbols and manages each one separately. Step one, the put. If you don't own any shares, have da-da-da. It finds a put option with a 30 delta, about a 70% chance of staying above the price, and a 30 to 45 days expiration. Then sells one contract to collect that rent cash. If you get assigned shares, it automatically switches to selling covered calls at that same 30 delta and 30 to 45 day window. It includes liquidity checks to make sure it only trades when there's a good price and enough people trading that option, which helps avoid bad fills. Okay, good. Multi-symbol wheel. Sell put, sell call, assignment called away. The only thing is that assignment doesn't actually work in Lumiwealth. Let me actually get another AI to focus on that. So I want you to take a look at the Lumibot project in my development folder. And I think we're going to have to give the ability to do share assignment for options. I think right now we only have cash settlement, but we don't have assignment working right now. And I think we're going to have to add that feature in. I think assignment is only for when you're shorting, right? I think it's only when you're selling options, as far as I know. Right? Because like when else would you get assigned? Right? 'Cause I think it's only when you're selling, right? Um,
When you sell the put, you're going to have the amount of the put secured in your account. You have to have the cash or the stock at that price secured. So it's a secured put.
right. So if you sell the puts, you're going to be forced to buy. right? But then if you sell the calls, you're going to be forced to sell. We also don't have that mechanism either, right? So I think we need to add both of those mechanisms into Lumibot. So I don't think we currently have that, right? Please just do your research around this. Don't change any code yet. Thoroughly research this inside Lumibot and tell me how you'd go about doing this and how you'd actually even make backtest tests around this. We already have a lot of stuff inside the tests folder that like run backtest tests. There's also, what was it called? Acceptance backtests as well, right? We got to think about building something like that as well to not just make sure that this works, but make sure it's tested well and make sure we actually have tested the back testing around this as well. So please do the research around this and let me know what you find. Okay, cool. Okay, so we're not going to have assignment working properly. That's a bit of a drag on this, but we can get that going. Let's run a back test. So run a, let's say, 3-week back test. See what happens here. In the meantime, let's see how this is working out here. Models, option sides, like cast style event path. Okay. Okay, let's see how this goes. And it's downloading some data here. Is this State of the Union tonight?
Just about ready to start, 9 o'clock Eastern. Should be starting. It looks like it's, yeah, a little late, but 9 o'clock.
Yes, one of my friends just messaged me about asking if I'm watching it. Yes, doesn't look like it placed any trades. I'll get the AI to fix this afterwards. Yeah. Why did not trade?
I mean, it seems like it should have at least sold the put, right? I mean,
Yeah, and also thinks we're wrong about this SPYM. No expirations. for SPYM put options. So I wasn't able to find the put options on SPYM. I actually see SPY used. I think our AI is going to be getting smarter soon too. Google released Gemini 3.1 a few days ago. And as soon as they release 3.1 Flash, I'm going to upgrade our stuff too to use their latest AI. Should be a nice improvement in intelligence.
Yeah, I was actually just using it the last couple days, the new 3.1. But
Yeah.
I'm good off their free version. But it did help me uh, with some things I was doing, and I got a good, nice result. So
Nice. I heard it's like the most powerful AI on Earth right now.
yeah,
Yeah. Which is funny how that's like starting to not matter as much. There's obviously still some problems that are like quite difficult and you want like really smart AIs, right? But I don't know about you. I'm starting to find that like the intelligence is I care less about the intelligence these days and I care more about speed. You
Mhm.
know, if you could have the same level of intelligence but 10 times faster, I'd be much more likely to buy that than a smarter AI, you know? At least for like what we use on our website and all that kind of stuff, because like speed is by far the thing that people complain about the most.
Yeah. Well, what I found is that with which was I forget what with Chat GPT, I ended up arguing it with it a lot of times, and with code stuff, and I found Claude to be much better. Um,
Yeah.
and this is and I mean the reason I used the Gemini 3.1 is I just wanted to see if I liked it better than Claude, and
Mhm.
I can't say that I like one better than the other. Uh, I think so.
Okay. Is this for generating code or what is this for
Yeah.
exactly?
Yeah, I was doing I was trying to replicate an index with only a few options, and I got a really good result. So,
Okay. Interesting.
yeah.
I
So
mean,
I
I,
mean, yeah, anyway, yeah.
I think it's pretty hard to beat Opus, like Claude Opus is like really good.
Mhm. Well, this one is I mean, if it I don't know, I mean, this one has more, it just came out, so it's got more recent it's cut off date, right? Is I think closer in than anything that Claude has.
Okay, so it has like more recent stuff, like all the newer libraries and things like that.
Yeah.
That's good. Yeah, that's definitely a bonus. Like it still annoys me every time I tell Opus to like change something to do with our AI and it like switches us back to like Gemini 2.0. I'm like, what are you doing? Like, like that's a very old model. Like that doesn't make any sense. Yeah, so I ran the back test, still not getting any trades. This is good. It's actually going through this. It's trading around 80 bucks. A 30 delta would put slightly out of the money. If the price is 80, it might be 78 or 79 put. Notice that the logs who tried strikes like 74. Strike anyone had a delta. Logs say closest strike. Wait, why did it pick 74 if 81 was closer to money? It's pretty cool. It's actually like fixing itself. It's awesome. I really want to work on speeding up our AI. This is like the biggest thing that I care about, or that like I've noticed our users care about. So it's what gets me to care about it.
Yeah, I mean, I totally agree because it's really I have to admit it is it's kind of annoying when you have to wait 5 minutes for an answer, right?
Yeah. Yeah, I agree. Yeah, we already sped it up quite a bit. So I made some big changes over the past like before I went on my vacation. So about 2 weeks ago, I sped it up a lot by doing like the CSV search was a lot better now. Because we switched it to using Parquet files instead of CSV, which, huge speed improvement. Like I think we even talked about this last time, right? It's like a 10x or more speed improvement. But
And also in memory also, you have a huge memory difference.
yeah, how so? What do you mean by that?
Well, from the CSV to the Parquet file.
Ooh.
I
Yeah,
mean,
definitely like
it's a
download
factor of,
times, all that. Yeah.
I mean, it's probably more, it's more than a factor of 10.
Yeah. Yeah, it's definitely a big deal. Big difference for sure. Absolutely. Yeah, because that definitely factors it too, because we have to download it from S3 and then like analyze it, right? So all of that stuff. But the CSV analysis seems to be like quite fast now, right? Like I'm not even noticing the speed difference there. Like what seems to be taking the most amount of time here is refining the strategy, which I'm really excited to get Codex 5.3. I really want to use that when it comes out because it's just like massively faster. It's literally 10 times faster than the old model. So this takes something like 30 seconds to 2 minutes to generate a strategy. We could probably get that down to like 3 seconds to like, you know, what, 12 seconds, 3 to 12 seconds, right? That's a huge difference, right? So if we can get that for strategy generation to be sped up, and then if we can get, I think the next thing is also going to be our basically analyzing the logs. I'm starting to notice that that's kind of like something that takes up quite a bit of time, and I'm wondering whether switching to Parquet files or something there too would speed it up as well. So all this retrieving logs like this takes a long time. It's pretty cool how it's like going in a circle itself, though. Definitely appreciate that. See if it figures that out. In the meantime, I'm going to check this here. Okay. Interstate is mostly right. Assignment is what happens to short side. Exercise, I was on long side. Expiry, short put can force a buy. Short call can force a sell delivery. I reviewed Lumiwealth and confirmed backtesting currently treats expired options as cash settled only. Right? Expired options are allowed to cash settlement and backtest. Broker events cash settled. Order status includes cash settled. Existing test validate cash settlement behavior. How I'd implement assignment, add an option expiration mode in backtest and broker. Keep default cash settled for backwards compatibility. Add a physical mode for assignment exercise. Short put close option create stock buy at price plus shares minus cash. Long auto access policy enabled. Stock buy at strike. The money would expire worthless. Add explicit statuses / events as statuses like assigned. So the question is here. So what I'm wondering is, I think for shorts, the default should be assignment, right? As long as it's obviously in the money, right? If it's out of the money, then no. And then longs, I think would still be cash settled, right? I think that's like actually how most brokers treat it, right? That for shorts, you get assigned, and for longs, you get cash settled. Is that true? Do you guys know?
What do you mean by cash settled?
It means
So,
that they just
I
give you
mean,
the
so,
value of the option.
well, I mean, what's going to happen, right? So you get assigned on the put, so now you have stock, right? And then you
Yeah.
sell a call against that, and you get cash in your account for the premium you take in. And then if that expires, if the price of the stock doesn't go up to the call strike, um, the call expires worthless, and then you do the same thing again. But if it goes up, if you're in the money on the call when it expires, then your stock is called away and you start the process over again, right?
Right, but you're just talking about shorts. I'm talking about longs, right? So for longs, you get assigned, right? If as long as you're in the money. I think that's just like the default behavior for most of these brokers, as far as I understand it. I think we should actually search how each broker
Oh,
deals with this, right? But I think the
no,
default behavior for shorts is getting assigned, and the default behavior for longs is getting cash settled, I think.
well, I mean, well, it depends. I mean, um, I think well, yeah, you have to actually, yeah. Hmm. If you're long the option and you're in the money, you might, um, you might actually get the stock, right?
Yeah, I mean, like that's what I'm saying. Like if you're shorting, right? If you're short,
Yeah, then
then
they
I
give
think
you,
you get
uh,
assigned,
yeah, then you, right, absolutely, you get assigned, and so
right?
you have to, you own the stock.
Right. Versus if you're long, I think you get cash settled. That's what I think happens. Right. So meaning if I own a call option on Apple and it expires tomorrow, let's say it expires today, tomorrow I should just get the cash in my account. Versus if I was short that same option, I was in the money, then I would have the next day, I would be forced to sell.
They actually give you the premium the day you buy the stock. You just keep it when the contract expires.
Yeah, I get
Yeah,
that's for shorts. Yeah, for shorts you get cash, but that's not what I'm talking about. What I'm talking about
Okay.
is cash settlement happens. Like if I own so let's put it this way, right? Like if I own a put option, right? And it actually has value, it's in the money, right? And then I forgot to sell it. Like that actually happened to me recently with a Google thing, which I'm actually looking at my account. I don't have the money in there, so I got to call Schwab's. But I'm pretty sure that they will just cash settle it for you, right? That those give you the value of whatever that option is and put into your account, right? Although I'm not seeing that at Schwab, so I'd actually really like to know how Schwab handles that because I got to give them a phone call. Um, when I spoke to them, they said that I would end up with the actual shares, but I did not end up with the actual shares in my account. Um, so I don't know what the heck is going on with Schwab there, right? But anyways, I think there's some research required here. I think we need to research how these different brokers deal with it. Like what is the actual way to do it? And then that's the way that Lumibot should work by default, right?
well,
And I think, assignment is probably the way that shorts should work by default. And then longs, I think probably cash settled. That's what I think, right? But I could be wrong about that. So please do this research and then let me know what questions you have for me. Okay, and our multi-symbol wheel seems to actually be trading now. Check that out. This is actually doing pretty well. Look at that, 14% annual return. That's not bad at all. Expand expiration window 20 to 60 days. Smart liquidity. I loosen the spread filters so that hey, let's see how long this took. It took 56 seconds to complete, so it's also fast. Okay, why don't we run a longer back test? This actually looks pretty promising so far. 14% annual return. Please run a 1 year long back test. This might take a while. I think maybe right now is actually a good time to take a break because this back test is going to take some time. Um, and we could come back and we'll see this thing hopefully be finished up, right? All right, guys. So I'll see you in a couple minutes, all right? All right. Hey guys. So far it's looking pretty good actually. Let me share my screen. You guys can see what's going on here. This is actually looking like a pretty good strategy. Look at how stable this is. Is this what you guys have you guys actually tried trading this in real life? I think Maurizio, you have, right? This looks like a very stable income strategy. We had a crash here in March. Went from 99,000 down to 90,000. That's a pretty big crash. 10%. But I think the actual crash of the market was quite a bit worse. Let me close some of these up. Let's see. 1 year, this is March. Yeah, it went from $69 a share down to say 58. So it's like 10 bucks. It's almost like a 20% drop. Right? And it looks like our max drawdown was only 10%. It's very stable. Like I could see why someone would want to invest in this. It's like a very nice stable return here. So what do you guys think? What would you want to modify about this?
Maybe put a constraint in there on the like the suggestion was the 200-day moving average, and it looks like it may have stopped that drawdown at 4.7.
Yeah, I agree. I think that would have done that. We'll be very revealing. Da da da. Actually, let me ask the AI first. Okay, so we ran this strategy, and this is actually pretty good. I mean, it's not exceptional returns, but very stable returns, which is very nice. We did have this big drawdown. Makes me think that a 200-day moving average would probably help here. Well, what else do you recommend? Please analyze the results here, and what do you think would be some good changes that we can make here? Don't make the changes yet. Just do your analysis on it. And let me take a look at this here for assignment as well, because we're not actually doing assignment correctly. So that's actually like a big thing here. We should really add that in. Let's see what it got. So check this against broker. Da, da, da. Short answer is no. Shorts get assigned, longs get cash settled is not the general rule. For US options, default behavior is mostly by product type, not long versus short. Equity options generally get physically settled. Shares change hands. Index options generally get cash settled. Okay. That makes sense. Actually, you know what? That actually makes a lot of sense. I think I remember that. Index options get cash settled. Okay, so this is some very good research. So, I mean, if that's what brokers tend to do, if you take a look at our back testing philosophy in our documentation, you'll notice that what we aim to do is we want to be as close as possible to what brokers actually do. So if that's what brokers do is that they physically settle equity or ETF options and cash settle index options, and that's what we should be doing by default in our backtester as well. And then to answer your questions, your first question is, should we model expiration day physical assignment exercise only first and defer early assignment. Why are you talking about early assignment here? I mean, it wouldn't be a bad idea to add in early assignment as well if it's not too difficult to add it in. Like while we're working on this, we might as well add an early assignment. But like, how would you even know that an early assignment is going to happen, right? Like, how would you even model that out, right? Because we could model that on expiration, but then early assignment, how do you know that, right? But I mean, if we could add that in, that wouldn't be a bad idea to do that right now because while we're working on it, we might as well do it. And your second question is, should physical settlement only apply to equity and ETF options while keeping index options cash settled? Yes, exactly. That is exactly what we should do. If that's what the brokers do, then that's what we should be doing. All right. And then your third question is for long in the money options with insufficient buying power in shares, should simulator behavior be auto liquidate before close, submit one, or force exercise and allow negative cash short stock? Again, whatever the brokers actually do, whatever is the most reasonable thing that a broker would do, then we should also copy that. So maybe you need to research that for question 3. Whatever the brokers are actually doing, we should model that behavior as well. All right, and then your fourth question is for short in the money options at expiration, do you want deterministic assignment always assign or probabilistic edge case handling near close? I don't know what the hell you're talking about, to be honest with you. Again, whatever a broker would actually do. That's the criteria here. Whatever a broker would actually do, we want to be as close as possible to what brokers actually do. And then your fifth question is, do you want explicit trade statuses events like assigned and exercised in logs or keep cash settled style reporting abstraction? I actually think assigned and exercised probably makes more sense. What do you think? What do you think is the best thing to do here? I personally think probably having the different statuses makes sense. Although I'm wondering whether it'll break anything, right? Because cash settled, there's like a lot of nuance to all these statuses and how it gets handled. So if you're going to create new statuses, then you need to be damn sure that you're covering all the nuance of it. There's probably a lot of ways that cash settles propagates through everything, right? So if you're going to make these new statuses, which sounds like it makes sense to me actually, you're really going to have to be careful about like, okay, how is cash settled used throughout everything? How does it propagate through everything? And make sure that we have really good testing around this to make sure that that's all going through to the CSV files, to the Parquet files that get generated at the end, that that's properly put into the trades HTML and the trades CSV and the indicators HTML and the indicators CSV. Like that needs to all propagate through and all needs to be tested, that that's all working properly for the whole spectrum of the backtest, not just the backtest itself, but all the artifacts that get generated at the end as well. And then the sixth question is, should this new behavior be default? Yes, it should be. We should mimic as closely as possible what the brokers do, and that should be the default behavior. And no, it's not about backtest compatibility. Backward compatibility is not important here um, because it was wrong to begin with, right? And if we were doing things incorrectly before, then this is actually an improvement. So please do your research. It sounds like you need to research a lot more about what is happening internally inside of our code base, especially around the artifacts that get produced at the end, like the trades HTML or the trades CSV or the trades Parquet file. We need to make sure all that stuff gets propagated and all the statuses work. We have testing around all that and like a full integration test for the whole back test as well. And then it sounds like you also need to research more about how the brokers actually do the stuff. Like your third question, you should be telling me what should be happening there. And same thing with number 4, you should be telling me what is the correct way of doing this as opposed to you asking me. Okay, so do your research and then come back to me and let me know if you have any other questions or if you think we can get started. It sounds like it'd be a nice upgrade to backtesting. Okay, and this is what the analysis came back as for our strategy. The 1-year backtest results are very insightful. You hit on a key observation. The strategy provides stable income during a flat or rising markets, but it's vulnerable to significant market corrections. That makes sense. Total return, Sharpe ratio, max drawdown, the falling knife effect. Looking at the data, SPY had a significant drop from approximately $600 down to 490. So it's trading SPY now. I guess because SPYM had difficulty with options. So wait a minute, why are we trading SPY instead of SPYM? We originally had this set up to trade SPYM, which is a smaller version of the SPY ETF. Why are we now all of a sudden trading SPY? We want to use SPYM because it is a fraction of the cost of SPY. And therefore, if we got assigned, we wouldn't need as much cash. That's why we originally chose it, right? So why did you switch us back to using SPY? Is there like an actual reason for that? Maybe you couldn't find the options or something? Yeah, the wheel actually saved us, gave us downside protection. Cash settlement versus assignment. Options are cash settled upon expiration. This means instead of buying the shares, the strategy simply took a cash loss, which expired money in a wheel. We would have been assigned the shares and started selling covered calls. Yeah, we need to fix that. It's gonna be hard to do a wheel strategy without that fix. So that's being worked on right now. And stable but slower, the strategy produced very consistent small gains during the recovery. But because it only sells one contract at a time, it didn't capture the full upside of the market bounce as quickly as owning the stock outright would have. Recommendations for improvement, the 200-day SMA filter, the trend is your friend rule. I don't know why it helps. Okay, so we already know that quite well. RSI value, only sell a put when RSI is below 50 or 40. Right, the VIX fear filter. This is a good idea, working with VIX. Option premiums are higher when people are scared. By waiting for a bit of fear in the market, you get paid significantly more for making the same promise to buy the stock. Multi-symbol diversification. Instead of putting all of your capital into SPY, we can split across the Mag 7 or different industry ETFs. Yeah, that's what we talked about before. And then in terms of your suggestions here, I think 200-day moving average filter is probably a good idea. We should probably add that in. The RSI, I'm not sure about. We've tried RSI in the past and it hasn't worked out very well. The VIX filter sounds like a good idea. We should definitely look into that as well. Then multi-symbol diversification, I think we could leave that until after we've kind of figured this out with one symbol first, and then we can start adding in more symbols. What do you think? Don't change any code yet. Just let me know what you think about all this. What do you guys think? What are your thoughts on all the changes recommended here? Or is there anything else you guys want to change?
Well, I don't think we want to change too many things all at once because you don't know what if it helped or not. And it didn't take that long to do the back test, so I would suggest we just do the 200-day moving average thing and see how it works with just that.
Yeah, just keep it. Yeah, I'm thinking 200-day moving average. I think VIX would kind of make sense, but the VIX can go both ways, right? Like if we don't trade when the VIX is too high, then you don't get enough premium, right?
Mm.
So do you want to trade when the VIX is higher, or do you want to trade when the VIX is lower? Right? I think that's the question here too, right? Okay, let's see
I
what
was
it says.
thinking, I was thinking either bulging bands, right? Whatever distance is farthest away from the bulging band is what we want to do the opposite to it, right?
Mm,
I was thinking about
okay.
that's one idea for me, but the VIX is also built. I mean, I haven't tried it with the VIX. I'm
Okay.
interested in that.
Okay. Interesting. So when you say Bollinger Band, do you mean that you're switching between the cash secured puts versus the covered calls depending on where we are in the Bollinger Band?
Yep. Wherever the stock market, wherever it's furthest away from the bulging band.
Okay.
Because that's an estimate of what you want to be, you know.
Yeah,
That
because
was
I
my
think it
thing about,
works.
but it could work also with the VIX too. I was just thinking of um Yeah, I haven't really thought about it with the VIX. Let me think about it for for a minute, how it might work.
Yeah, because
Well,
you can
let's
do both,
test
right?
it. We'll find out.
Well, the problem with using the VIX is that if the VIX is too low, I mean, yeah, too low, then you're not going to trade. And, you know, you, uh, yeah, I mean, I guess that means, yeah, if the VIX is low, that means it's in a rising market pretty much, right? So, I mean,
Yeah,
obviously, if this, if you're in a bull market and you never, just as a thought experiment, and you never have a drawdown, all you do is you just sell puts, and collect the money,
right.
right? So this is just helping out with I mean, and also the assumption with the wheel strategy is that the long term is that the price is always increasing, right? Um,
Hmm.
so, you may get assigned, but then you sell the call against it and you're still making money while the stock price is going back up, right? So then you get back to just selling puts again.
Right.
I mean, yeah, so the problem with the low VIX, if you sell in that environment, then you're getting, you have to be closer in to get the same premium, right? Closer in. And so if you have so when you have a drawdown, it, it'll hurt you more than in a higher volatility environment.
Right. Because at least you have the premium to buffer you, right?
Right. But that's not, I mean, if we try, I mean, we should definitely do this from 2020, start the back test in 2020 because it'll go through um, you know, through the disaster we had for COVID, right? And
Yeah.
see what it does. I mean, it's obviously going to hit, you're obviously going to get assigned and see how it recovers.
Yeah, that makes sense. Yeah, I think just adding in assignments is a really good idea. So this AI is working on this right now. I think we'll have that by the end of tonight. Probably not by the time that we finish this session, but I'll let it keep working and we'll add that as a new version. By the way, this is the reason why I didn't use SPYM. The spreads were crazy. Look at this. The bid-ask spread was over 85% in some situations.
Oh,
That's why it switched back to using SPY.
yeah. Well, I mean, one way to look at it also is that if it doesn't work on the SPY, it's certainly not going to work on the SPYM, right?
Yeah, for
So,
sure. Yeah.
so it's best to see what it does here. Because I mean,
Yeah.
the SPY is probably I mean, other than the SPX, I think it's the most liquid, options market. I know that the prices are a penny wide, you know.
Yeah.
So I mean, you can't do better than that.
Yeah. Yeah, I agree. Loosen the fill rules to make it sure exactly trades in a back Tesla. So I'll tell the bot to be a bit more aggressive with its pricing so it doesn't get stuck waiting for a perfect fill. Your filter ideas. 200-day moving average, yes. This is the golden rule of trend trading. Yeah, it definitely works. VIX filter, yes. There's a great premium harvesting. Only sell puts when the VIX is above 15 or 20. This ensures you're getting paid a high enough rent to justify the risk. RSI, no. We'll leave this out as per your experience. Multi-symbol later. I mean, honestly, I think we should probably stick with just SPY. That's what I think,
Yeah.
right? Because
For test,
SPYM, if they have spreads that bad,
right. I mean, I think for testing this out, that's the ideal index or
Yeah,
or ETF. I really do think so.
yeah, I agree.
And then we can stick any other ETF in there that we want, right?
Hmm.
Um, so
Yeah, it should make it pretty simple to swap, you know.
yeah, yeah.
So why don't we just add in the 200-day SMA then? We'll see how that works. And maybe backtest over a longer time period. How long does this take? This took 10 minutes for a year. That's actually not too bad. It's pretty fast, especially considering I have to download a lot of data. It's actually not too bad in terms of speed. So I think your point around SPYM makes a lot of sense. The spreads are way too big. Like if we have spreads that big, like that just doesn't make any sense. I think using SPY makes more sense. And then I think we should add the 200-day SMA. That makes a lot of sense to me. And then the VIX filters. I mean, honestly, I'm not entirely sure about the VIX filters, right? Because, you could only sell puts when the VIX is above 15 or 20. But then again, that's also like a pretty dangerous time to sell. So I'm not entirely sure about the VIX. Maybe we should do that in isolation. Maybe we should just do the 200-day SMA first, see how that works, run the back test, and then later on try a VIX filter and see if that improves things or not. I'm also thinking we should probably back test this going back a little further, but we should probably do the 200-day SMA filter first and then run the 1 year back test, and then we'll go from there. And then after that, we can try going back further. Let's see. We could also try that Bollinger Band strategy.
Now I'm interested to go this way. I was just thinking that earlier. I mean, I wrote it down on some of my strategies before, but
Hmm.
I haven't done this way. So I'm actually interested to see what we're doing here with the VIX.
Okay. Yeah, let's see what happens. Yeah, and this is still not totally realistic because this is not doing assignment properly. I'm really thinking about it. I got to call Schwab. That's like $3,000 that just disappeared from my account otherwise. So the only thing with options, like you really have to pay attention. That's why like bots are so much better for options. Because I was like manually trading this and I had these Google options. They're worth like $4,000 almost. And then they expired, and Schwab told me like last minute that they're expiring. Like, oh shit, I didn't realize until after the market closed.
Hmm.
And I called them up and they said, yeah, you'll get the money. Don't worry about it. He was very reassuring. But now I don't have Google shares and I don't have the cash in my account. So what the hell happened?
Oh yeah.
That happened to me too one time, and
Yeah.
it took like almost a week or two for me to see the funds in my account.
Oh, really? Okay.
Yeah, it took
Was
quite a bit.
Schwab too, or what
No, I
broker?
wasn't with Schwab. It was actually with Fidelity.
Okay. Similar
But
though.
I let the contract expire like that, and I promised myself I wouldn't do that again. But it did take me a while to see the funds.
Okay. So hopefully I'll call them and hopefully they'll tell me the same thing. Because that's a pain in the ass. Like $4,000. Like what the hell, man?
Yeah,
That's a nice
but
vacation.
Mhm.
Yeah, hopefully you're right. Hopefully that's the case. But that also just makes me think like how much better bot trading is. Especially with options, you just make mistakes like that. You forget, like life gets in the way, right? Like this is what I do for a living and I still forgot. You know what I mean?
yeah, I know. That's what happened to me too. And I was trying to, I let one of my contracts expire. But good thing I was ahead. But it did take a while for me to see the funds.
Yeah, okay. All right. Well, hopefully that's what they say when I call them. Schwab actually is pretty good at customer service after hours, by the way. Like I called them after a market closed and they actually picked up pretty fast. I know a lot of people complain about their customer service, but after hours they seem to be pretty damn good. Hey, there's the back test. Much lower drawdown this time around. This might actually be a winner. Look at this. It went through March, barely dropped. And if everything else kind of keeps up the way that was supposed to, then like this actually seems like a really good idea. Just a nice little income generating thing. Let's see where we're at with this. Okay, I've identified no code changes made is research only. You're right to push for broker realism, but the assumption is off. Some is not short to sign long by default. Yeah, index options or products are generally cash settled. Yeah, what Lumiwealth does today. Recommend default behavior, settlement mode by product. Expiration policy, short in the money, options assigned, long in the money, exercise until broker risk gate blocks. Expire worthless. Okay, that makes sense. For long in the money options, sufficient support, testing plan. Okay, it seems like a good game plan. Let me answer your questions. Your first question is, do you want underlying delivery from assignment exercise logged as separate stock trade rows in trade events and trades? Recommended, yes. And I think they should be marked as like they were assigned as well, right? Because it's not like you bought them, right? There's like an assignment that happened. So maybe we've marked them as a buy. I'm just thinking about how this works with all of our infrastructure. Maybe we mark them as a buy, or maybe we mark them as assigned. I don't know. But yeah, we definitely should mark them as a separate trade log for sure. Right. And then your second question is for unsupported log. And by the way, you could check kind of how BotSpot React works and BotSpot Node works, because we actually display a lot of this stuff in graphs to our users. You could see on the AI agent page and in the backtest details page, and there's like a backtest, you know, the component that's used, right, to show these graphs. We might need to make changes there as well to handle these new trade types. And then also in the trades.csv and the trades.html and the trades Parquet files, we'll probably need to make changes there as well. And we need to make sure that all of our infrastructure handles this. But check the BotSpot React project and BotSpot Node projects to make sure that they're handling these trade types as well. And maybe even BotSpot Agent. Check that project as well inside our development folder. There's a lot of research required for that, so take your time researching that. And then your second question is for unsupported long in the money options, should default be auto liquidate when DNE is needed? Recommended. What is auto liquidate when DNE is needed? What does that mean? What is DNE? Or force exercise and allow negative cash short stock. I mean, whatever a broker would actually do, whatever is most realistic that a broker would actually do, and you should research that. You're asking me these questions, but really you should be telling me this is what a broker will typically do, and we should be following that. And then your third question is, do you want early assignment enabled by default or shipped as optional heuristic first with a deterministic expiration model as the default? I don't like again, early assignment, like as far as I understand, early assignment is really quite random, right? Like you even have here recommend default behavior early assignment as an optional model first heuristic, not a hard default, because exact assignment timing is not directly observable ex ante. Yeah, exactly. Like, I mean, like early assignment, as far as I understand it, is like almost random, right? So that seems like a hard thing to model, right? Um, Making it optional makes sense. I think we should and add that sort of thing as well, because that's a possibility. But I mean, I don't know how we would actually handle that and how do other backtesting libraries handle early assignment as well? I'd like to see that research too. And by the way, please take all the stuff and make sure that you're creating a document inside the docs folder around this. You should make like a high level doc around this and maybe an investigation as well in the docs folder. Talk about, what have you investigated here? What do we know? And then how is this planned to work? Right? Like, how are we planning to do like assignment versus cash settle versus whatever for options? And there should be like a living doc around that inside of our docs folder. So we start at least documenting this stuff well too. Okay, here we go. Really weird spikes that happen here. But overall, the 200-day moving average, lower annual return, which does make sense that the annual return would be lower if we got that 200-day moving average. But the drawdown is also lower. Our Sharpe ratio, I think there's some weird spiky stuff happening here. I want to actually figure out what the heck's going on there.
Hmm.
So I don't know, the 200-day moving average, I mean, it seems like a trade-off, right? Your drawdown is lower, but your return is also lower. Because I guess with the wheel strategy, you're actually making money in those drawdown scenarios, right? Because you're selling puts. So what do you guys think? I don't know if I like that change. Do you guys like the 200-day moving average change or not? Do you think we should remove that?
No, I don't. I mean, the thing is maybe, maybe there's a different time scale that would work better. That's, I don't think there's anything magic about the 200 day.
I mean, it has served a lot of other stuff quite well.
Yeah,
Like
I
200
realize
day
that.
definitely seems to be a pretty good indicator, actually. I mean, my thoughts are to remove it and back test for going back further. That's kind of what my gut's saying.
I agree with that. But I don't like the Sharpe ratio though. It's pretty bad.
It is pretty bad. Yeah, but that might be kind of messed up because there's some weird spiky
Oh,
stuff
yeah,
going
there's
on here.
weird stuff there.
Yeah, so that might be affecting the Sharpe ratio. Like, I don't know what exactly is happening here. I think like our mark-to-market accounting might be getting screwed up or something.
Yeah, and the max drawdown clearly is one of those spiky down things, right? So,
Yeah, yeah,
um,
exactly.
I mean, if you sort of took the average, it looks pretty good. If you or take take the median, get rid of the
Yeah,
net.
maybe we'll ask about that first. Let's figure out what the heck is happening with this like weird spiky stuff here. So I want you to investigate something and know that there might actually be something, maybe there's something wrong internally in Lumibot with the mark-to-market accounting, or maybe there's some weird stuff in the way that orders are being placed. But like there's this really weird, like for example, let's put it this way. March 24th, we're at 97,000. March 25th, we're at 97,000. Then March 25th, again, we go to 101,000 out of nowhere. And we drop right back to 97,000 on March 26th. And then we pop right back up again to 100,000 on March 26th. And then drop back down to 97,000 on March 27th. And then pop back up again to 100,000 on March 27th. And same thing on April 4th, it dropped down to 94,000 from 97,000, like midday. And then April 8th, something similar happened. And I think this is actually where our drawdowns came from because like this random spikes down, which seems like there's something wrong. It seems like there's almost something wrong with Lumibot in terms of the mark-to-market accounting that's going on here. Or maybe there's some sort of weird trades that we're placing that don't make any sense. Can you please investigate that and tell me what the hell is going on here? Why is there these big spikes up and down? Yeah, there's something strange going on there. Yeah, the portfolio value data clearly shows some spikes. I'm pretty certain those are going to be tied directly to the option valuation process. That makes sense. You might need to do a little bit of a bug fix here. Missing quotes as permanent for this run. Yeah, so it's missing quotes. I thought we fixed all this stuff. Seems to be still another issue here. You know what? Let me get another AI to work on this. Um, I do. So I want you to investigate something. I'm going to give you a bunch of code, and I'll give you also details about backtest in our back end, so you could actually like research this. But there's like some really weird spiky stuff that's going on here. I'll give you a little bit of details as to what's going on. I'd like you to rerun the backtest. I'd like you to go through all that kind of stuff. I'm going to give you um, a file that we typically give to triage backtest incidents. This didn't come up as an incident because it didn't actually crash anything, but a lot of stuff still applies. Right, so I want you to read this file to really understand what's going on here, right? And then I'll give you the backtest details and the code, right? And I want you to basically do your analysis like you would with a regular backtest incident. So please read this entire file here. And here's the backtest details and the code. See if we can figure out what the heck is going on. And here's basically the problem that we're having, right? This is basically the issue. Definitely unusual, but the good news is that they aren't a bug and a strategy or a mistake. So you're seeing as a data artifact in the backtest engine related to how options are valued. The pattern every day in the market close. Yes, good news. It worked. Yeah, there's definitely an issue here. Yeah, so I'll have that analyze everything. Yeah, because without those spikes down, right, the drawdown is pretty close to zero actually, right? Like this isn't a real drawdown. This is just a valuation issue. I think what's happening is like because it's missing bid ask prices or something like that, it's valuing the option at zero when that's not actually true, right? And that's like getting it to move this unusual amount of dollars. So yeah, this is very telling, and I think our max drawdown will actually be quite different if we didn't have these spikes down. Like you're wrong. This is definitely a bug in Lumibot. You're saying that there's no issues here. That's not true. There's definitely a bug here, and I'm getting another AI to investigate that. But what would have been the max drawdown without those spikes, right? So those are definitely causing an issue here, and this is incorrect actually that we have a 7% max drawdown because that's really just the spikes down, I think, right? What would be the actual max drawdown if you remove those spikes?
On the bottom plot, would it be possible to plot the 200-day moving average on there so we can, oh, you'd have it.
It
Oh,
is here. It's for some reason
oh,
it's not very consistent.
oh,
I can get the AI to fix that though.
oh, okay. Yeah.
Yeah, so your actual drawdown was 4%, not 7%. Yeah, that makes sense. That's actually very fast. It only took 48 seconds to do this. Good job. That's an improvement. This is much faster now. Our option eventually expired in the money with the final settlement value of exactly $48. The engine was peaking at the final result and using it to value your position weeks before it actually happened. The clean performance results. I ran a custom SQL analysis. Okay. Okay. I mean, I'm thinking this is pretty good, to be honest with you. The annual return is not very high, so I think we should use more options, right? The only problem is, I guess, if you get assigned, or would the broker even allow this, right? Like, let's say on $100,000 account. So, okay, this is actually pretty good. If the drawdown was actually only 4%, and this is actually better with the 200-day moving average. The question is, would a broker allow us, let's say on a $100,000 account, how many shares can we actually do this with? Can we increase the number of options that we're selling, or is that something that a broker is just not going to allow? Because this is good, but the return is quite low, right? Like a 4% annual return is nothing to write home about. You know what I mean? Um, like even in this interest rate environment, interest rates right now, I mean, you could search what they are. I think there's like 3.5% or something like that, or 4%. So I mean, like we're barely beating what we get from a bank. So I mean, the return is very low. And one way that we can improve the return is just by trading more contracts. But um, is there our broker even going to allow that? Right? Like here we're trading $100,000 account. Or can we even trade more than one contract? Can we trade two contracts, three contracts? Is that even possible? Because seriously, a 4.5% return, like I could pretty much just get that at a bank, you know?
Just signed up for Open Bank. It's a partnership through Verizon, and I get a $15 a month reduction on my bill every month, and they're offering 4.09%, which I thought was
There we
pretty
go.
good, you know.
Yeah, there we go. So I mean, the wheel
Plus the kick.
strategy looks, yeah, yeah, the
Go
wheel
ahead.
strategy looks good, but the overall return is like pretty crappy. Like that's
You know,
four and a half percent.
I do this kind of stuff with my I've got an IRA that I trade in, and like I said, I do the stuff. And a lot of times I don't even do the puts. A lot of times, if the stock is moving, I try to buy the stock, then write the call above where I wrote above where I bought the stock at, and then I like to see the stock go up and go above it, and I'll get my stock called. So I get not only selling the covered call, I also get the appreciation up to the point of where I wrote the call and sell the stock and get that difference. So it's tough with these big dollar ones, I think, to come up with stuff. So anyway,
Yeah,
it's interesting though. It is an interesting way of looking at things. That if there's a way to do it, if you don't have to have a big chunk of money, you know.
yeah, makes sense. Yeah, so this is what the AI says. It's like you're absolutely right to be frustrated with the 4.4 when high yield savings accounts are paying 4% to 5% and the Fed funds rate is at 3.6. You're essentially taking market risk for almost no extra reward. Yeah, exactly. Which is why the Sharpe ratio is so bad, right? Um, the reason your return is so low is that your $100,000 account is underutilized. Here's the breakdown, the math, why one contract isn't enough. And your backtested strategy is selling exactly one contract. One contract represents 100 shares, 60,000 of stocks. Collateral to be 100% cash secured. The broker holds $60,000 of your cash. This leaves $40,000 of your account. If you only trade one contract, you're effectively only investing 60% of your money. To beat the bank, we need to be more of that capital work. Can you trade more contracts? The broker's view, yes, absolutely. The broker will definitely allow you to sell more than one contract on a $100,000 account, but it changes the nature of the strategy. The safe way, you have enough cash to buy the shares of assigned. You never owe the broker money. The aggressive way, two plus contracts. If you sell two contracts, you're responsible for $120,000 of stock. Since you only have 100,000, you'd be using $20,000 of margin if you were assigned. Most brokers only require about 20% of the underlying value as initial margin to sell a put. Oh, interesting. They might only lock up $12,000 per contract. So technically, a broker might let you sell 5 or 6 contracts on a $100,000 account. However, if the market drops, your losses would be 5 or 6 times larger, and you would face a margin call very quickly. Okay. How to boost returns to 10 to 15%. This to make the strategy worth it compared to a bank account, we have three main levers. Increase the contract count, dynamic sizing. Instead of hard coding one contract, we can tell a bot to use 90% of your total equity. Okay, that makes sense. Once the account grows to 120, it would automatically start selling two contracts. Recommendation, we can set a leverage parameter. If we set to 1.2, the bot would sell two contracts immediately. Trade higher yield symbols. SPY is very safe, which is why the rent premium is low. If we trade symbols with more volatility, the premiums are much higher. Tech stocks, QQQ or NVIDIA, higher premiums but higher risk. IWM, small caps, often pays better in SPY. This is exactly what you guys are talking about. The VIX timing, premium harvesting. As we discussed, selling puts when the VIX is low is like selling insurance when there are no fires. You don't get paid much. If we only sell when the VIX is above 20, we ensure that every trade we take is high paying. My recommendation, dynamic sizing, target leverage, VIX filter. Um, what do you guys think? I mean, in my opinion, only selling two contracts is like pretty, you know, pretty low. If the broker allows us to use 20% of that as the initial margin, then I would do that, right? Like I would go all the way up to 5 or 6 contracts is what I would do, right? Or even four, so we avoid margin calls. But theoretically, four should give us an annual return of like 15%. That's pretty damn good, you know?
Mhm.
What do you guys think?
Well, I think the thing about the 20%, that's what I thought was if you had a portfolio margin account. I think that isn't it called Reg T or something for what you can do without portfolio margin? And I think that's like, 50, you can only do 50%. So,
So you're saying
but
that this 20% of the underlying value is only under portfolio margin, is what
I
you're saying.
believe that's the case. I'm not, I don't know that for a fact. But what I do know, I mean, because I mean, that's what I use on Interactive Brokers. And what's nice about it is that, if I have a put and, I mean, let's say the margin requirement is 10,000 bucks, that is exactly the same margin requirement as if the stock is put to me, right? So now, so if I get caught, if the price goes down and I'm in the money and I get the stock and the stock gets put to me, the margin requirement is then the same as it was for to sell the naked put, which is great because I don't get a margin call, right? Because I've already, because everything is okay. So,
Yeah.
um, but
So
now in a regular account, I don't know what the answer, I I do remember that that happened to me before I had portfolio margin and, you know, you wake up in the morning and you've got, $50,000 margin call or something and you have to sell the stock. So,
Yeah, I've gotten burned badly by margin calls before, so I'm a little bit squeamish of that personally,
yeah.
right?
But the
But
portfolio margin makes really, I mean, makes makes your life better if
yeah,
you
that
do
makes
it.
sense. That makes sense. Yeah.
Really
That
does.
makes sense.
I highly recommend it.
Yeah, I feel like some research is required here around what brokers would actually allow this, right? Like we work with like Schwab and Alpaca and Interactive Brokers. I feel like researching and Tradier and seeing how they actually do it. But I would personally go, in this case, the aggressive is 2+ contracts. I would actually go more to like 4 contracts in this case, as long as it's not going to like really kill us with a margin call, right? In this case, I would have been trading 4 contracts. I think that probably makes the most sense. What do you guys think? Right? Because 4 contracts, theoretically, we're getting close to 20% annual return, right? And in this case, our max drawdown was only about 4%. So times five, theoretically, right? I'm assuming it all scales linearly, right? We'll have a 4% max drawdown times four. That brings us to 16% drawdown, which is still less than what the stock market did over the same time period. And then a 4.5% annual return times four is going to bring us close to 20% annual return. So 20% annual return with only about a 15% drawdown, like that sounds like a good idea to me, right? What do you think? I don't think we should be doing this VIX filter either. I think that adds a lot of complications.
I
I
was
have a
hoping
problem
for
with the risk
it.
reward portion of it.
But
It's
yeah,
you do 4 contracts, you got a margin call, you get caught with your pants down because of some bad news before an expiration or something, you end up with 4 contracts. What are you gonna, the risk reward? You do 4 contracts, you can get 12% a year. I can buy 100 shares and let it sit there for a year and make 12% in the index. Okay, so I'm trying to figure out, just is it worth the time and effort and the risk?
Well, I think it'd be more than 12%. I think it's 4 times 4.5. So that's 16, so
Okay,
18%, right?
and
Assuming it
what's the
scales linearly.
downside?
And the downside, I think, would be 4%-ish times four. So it's around 16 to 18%. So pretty similar. Like the return, annual return and the max drawdown seem to be pretty close to each other right now. So I think we'd have around an 18% drawdown and around 18% annual return, I think theoretically, assuming it scales linearly, which I don't know if it does, right? So the stock market around that, like SPY around that time period, dropped from, let's say, 600 to a bottom of around 479. So that's what is that? 600 to 479 is what? 20% ish, right? So we'd have a drawdown around the same as the market, but our annual return is higher. It's closer to 18% as opposed to like the typical 12%. So it seems a little bit better than owning the stock market.
Well,
It would
just
seem,
all
but
we have to compare is the Sharpe ratio of the market to the strategy, right?
yeah, yeah, for sure.
So,
Yeah,
because that,
assuming we get rid of these spikes, right?
oh yeah, as soon as we get rid of
Yeah, we get rid of the
um,
spikes and we can just compare sharp ratios. Absolutely.
yeah.
Yeah.
And by the way, I did a search on the portfolio margin versus Reg T, and Schwab has a page on it, which I think is really, it basically tells you everything. So uh on the index options, it says they use a 30% minimum house maintenance requirement for the Reg T. And for the portfolio margin, you says allows 6.6 to 1 leverage. So it's about 15%.
That's on index options, though. What
That's
about
on
S?
index options, not on stocks. Yes, that's right.
Yeah, SPY would be different, right?
No, well, um, I think that well, you might be right, but I think that might apply because it is It's an ETF on an index.
Yeah, but I think it'd be worth researching SPX
Yeah,
versus SPY. And maybe
right.
it
Well,
makes more sense for us to use SPX anyways.
yeah,
Maybe we should be using SPX instead of SPY. That'd be an interesting thing to check too, right? It depends on the margins and stuff like that as well, right?
mhm,
And they get cash settled, which is different, right? You
mhm.
don't have to worry about assignment with
Right.
SPX.
And they're European options, so you don't ever have to worry about early
Early
assignment.
assignment.
Yeah,
Yeah. Early assignment basically goes out the window,
right.
right? So maybe SPX is the better choice here anyways, right? That'd
Yeah,
be
except
interesting
that
to take the research.
well, I mean, maybe what's the smaller? I mean, the SPX is, huge. So what is it? XSP? It's 10, it's a tenth. It's the same as the SPY.
Right. And yeah, we use XP instead of SPX in order to do that because the SPX is going to be huge. Yeah, you're going to have
Yeah.
like really big liabilities. And it'd be hard, even in $100,000 account, to kind of fit that in there, right?
Yeah, you might do one. I mean, you could do probably one contract. Um,
Yeah, that makes sense. Okay, I think there's a lot of research required here. Yeah. I got the AI basically to listen to our conversation. Like, there you go. Looks like it's making some progress here on this too. Research phase complete. Core answers your question. What routes expiration through cash settlement. Okay, let's please make this changes that we're talking about here. Please make these changes. Please make sure that you test everything and make sure that we also think about what happens inside of bot.spot React and bot.spot Node and inside of the trades.html file and trades.csv and trades Parquet files because those are actually going to have to work well with everything as well, right? Or actually, did you even do the research around that? I don't see any of your research. Actually, before we get started, what's your research around bot.spot React and bot.spot Node and bot.spot Agent and the trades HTML file and the trades.csv file? I don't see your research around that. What do we have to change there for this as well? Because I'm assuming we have different statuses now, so we're gonna have to like propagate that through everything. And this is the AI checking these big drops here. It seemed fine locally. So I don't think you're doing this correctly. You need to use the correct environment variables. Where these are different results than what we're getting in bot.spot production. So I think you're just using the wrong environment variables. I think you need to rerun your backtests. Okay. Okay, let's please go ahead and make these changes. Or at least like, okay, tell me what the game plan is. Tell me your game plan. What exactly do we have to do? What are we going to get done in what way? Give me your full game plan and let me know what questions you have for me if you have any other questions for me. There we go. There's the issue. I see it now. Okay, let's see. This is what the AI said around what we talked about. This is a fantastic line of thinking. You've hit on the exact wall that most retail traders run into capital efficiency. If you're only making 4.4%, okay. The four contract math. If we scale your strategy from one contract to four contracts, the number changes dramatically. Okay, current one contract. So it goes, annual return goes to 17.7%. The market did 15% over that time period. Our max drawdown goes to 16%. The S&P did 20% over that time period. And our Sharpe ratio is better. So it does improve our Sharpe ratio. At 4 contracts, you're beating the market return while still having a similar. Also, a smaller drawdown in the market. This is exactly where the strategy becomes a winner. SPY versus XSP. You're spot on with XSP. For a $100,000 account, XSP is a much better engine for a strategy than SPY. Cash settlement, the big one, as you mentioned, XSP is cash settled. If you get assigned, you don't wake up with $240,000 worth of stock and a massive margin call. The broker just deducts the cash difference from your account. It's much cleaner. Tax advantage, XSP is a section, whatever contract, meaning means 60% of your profits are taxed at the lower term. That's also important, right? The tax rate's better. Regardless of how long you held the trade, this can save you 10 to 15% of your tax bill compared to SPY. Margin efficiency under Reg T is what you were talking about. XSP requires about 15% margin, while SPY requires 20%. If you have portfolio margin like IBKR or Schwab, both are stress tested at 15%, allowing you to easily handle 4 contracts on a 100K account. Interactive brokers, they're the kings of portfolio margin. If you have 100K, they will likely give you a 6-to-1 leverage. So you need to run 4 contracts without breaking a sweat. Schwab, they require 125,000 in portfolio margin. So if you drop below 100,000, they'll kick you back to Reg T, which might force you to liquidate a contract. Trade year, these are great for SPY, but they don't have the same robust portfolio margin systems for index options. Okay. My recommendation, professional upgrade, switch to XSP. We get the tax breaks, cash settlement, and no early assignment risk.
Yeah.
I feel like Gil, this would solve a lot of the problems that you're talking about, right?
Yeah, that sounds a lot better than the SPY setup. So be interested to see
Yeah.
how it runs.
Yeah. Yeah, so XSP sounds like a good idea. I'm also wondering if we could do 4 contracts with XSP. Why don't we do more? Why don't we do 5 or 6? Is there like any harm to that? Right? Um, and
Other
two
than
hundred
you're
is
clo- other than you're closer to the margin. Um, if you have a 100K account and you get 6-to-1, right? You can certainly do 5, right?
yeah, I guess what's the chances of a margin call, right? Like even like let's say like a 2008 scenario. I always like to compare things to 2008.
Yeah.
Like what if that happened again, right? Um, would we get killed by margin calls by doing 4 or even 5 or even 6, right? I wonder how that would work out.
Well, was 2008 worse than the 2020
Yeah.
draw?
Yeah.
Oh,
2008 was like 50 something percent drawdown.
okay. Because I
That was
remember the VIX. I never thought I would see a VIX of 80 again, and it happened, right?
it keeps happening. It's
Yeah,
people have very short memories around this kind
I
of stuff.
know.
Yeah. I
Well,
remember 2008 vividly because it,
yeah,
it wiped me out.
yeah,
So like
yeah,
not like I had a lot, like I had like 30 grand at the time, but like it totally wiped out my life savings back then.
yeah,
Yeah.
yeah. But what I remembered is that the VIX lingered, I mean, it lingered around 80 for a really long time, in 2008 and in 20, 2020, it came back pretty quickly.
Yeah. Yeah, 2008 took quite a while to come back.
Yeah, that was nasty.
Yeah, that was really bad. Okay, let's see here. Rerun is complete. It was causing spikes, no weird extra orders. The equity jumps are mark to market on that short put, not cash movement. Same day, Delta. Bottom line, this is not a rogue order placement. It's an option mark to market repricing. Yeah, I thought we already fixed this. Like, I had a feeling that this had something to do with the mark to market repricing. I get that, but I thought we already fixed this. Don't we have documentation around this? I thought this was already fixed. Why is this still an issue? Right? Can you research this further? I thought we have documentation around this. I thought we fixed this already. You could look at our previous commits You can look at previous releases, you can look at the change log, you can look at documentation, you can look through all that stuff. I thought this was fixed. Why is it still around? And how do we fix this? Because the mark-to-market repricing is clearly not doing its job correctly. Okay, and then this is what it says here. This is where strategy moves from hobby to professional fund territory. You're asking exact right questions because 6x leverage, a bad day isn't just a drawdown, it's game over event. Here's a breakdown. Okay, 6x leverage math, danger zone, the math, 16% drop, the index would lose you $100,000. Result, your account hits zero. So a 16% drop in the index, you'd go to zero. That's not good. It dropped 34% in just a few weeks. At 6x leverage, you would have been wiped out long before the bottom. Why 200-day SMAs or life insurance? Yeah, this is obviously a very important part of it. The days where Black Swan gap down, like at 1987, 20% a day. Yep. XSP to professional's choice. Version 6 using XSP. Dynamic leverage. You can set it from 1 safe to 4 aggressive or 6 extreme. Have implemented its changes, but will now target your requested leverage. So what do you recommend as a leverage then that won't wipe us out if 2020 happened again or even 2008? You know, what's the correct amount of leverage here? Actually, can you guys give me a second? I'm gonna use a bathroom. Be right back. Okay, let's see the result here. So it's saying leverage set to 2.5, the professional, the sweet spot. So let's see. Why 2.5 is a survival limit. One bad day where the 200-day estimate can't save you, like a weekend gap or a 1987 style crash. The 2020 test, the market had a single day where it dropped 12%. You lose 30% of your account in one day. It hurts, but you're still in the game. Will likely let you keep the position open because you still have $70,000 in equity. At 6 leverage, you lose 72% of your account. The bank rate comparison, you're earning 4x the bank rate. I mean, this sounds like a good idea, right? What do you guys think? 2.5x leverage, that means 4 contracts, 18% annual return. Very stable returns, right? Yes, let's go ahead and build this and then run the back test again. Yeah, let's see. This seems like a pretty good idea. That's still not bad. 18% annual return with a 12% max drawdown. That's actually pretty reasonable, you know? Let's see where we're at with these. Dog through commits, change logs, should answer the Jan fix exists. But specific spike pattern is mostly real option repricing plus chart granularity. Not the old broken. Okay. This looks wrong. How to fix this practically and compute drawdown from end of day row for daily strategies. Add mark to market audit fields for per position. Are you sure this is the right solution here? And what questions do you have for me? I think once we rerun this, and if we get the results that I'm kind of thinking here, I mean, maybe we'll just run this in Alpaca and we'll see how this works. We'll have another strategy running. I do like switching to XSP, then we don't have to worry about getting assigned and all that. That seems like a significant reduction in risk.
Yeah, I totally agree. Maybe we got some sort of bug.
Yeah, I made a stupid mistake. Okay. Hey, I'm confident it's the first fixed path, but not 100% final until we validate. Okay, well, I'm confident about the old mark-to-market fallback. Bug appears fixed. Spikes are largely explained by large option quote repricing plus multi-row price charting artifacts. This could be what could still be wrong. Production specific data path. So to answer your question, so I see they actually did a run here. Let me pull this file up where I actually see the problem. I actually did see the problem in one of your runs. Here it is. On this run, there's the problem. You can see all the spiking going up and down here. So this is like, you could replicate this locally. Like there's lots of spikes up and down, especially around March 28th, March 27th, April 3rd of 2025. All those are clearly having like lots of these spikes. And then your second question is, should I treat the problem as a P&L logic bug or a UI drawdown computation bug? I think it's a P&L logic bug because you're also affecting the max drawdown and all that kind of stuff with this bug as well, right? So there's a problem with the P&L, right? Like this is the portfolio value is wrong, right? Because when the portfolio value is wrong, then it propagates everything else. It's a UI thing as well, but you're also calculating the max drawdown and everything else incorrectly as well based on this portfolio value, which should not be spiking up and down like that. And then your third question is, can you enforce one end of day equity point per day for this daily strategy and bot spot drawdown calculations? I don't know what you're talking about there. What does that even mean? And why would you do that? And your fourth question is, do you want me to add mark-to-market diagnostics and artifact UI for every option position, each bar? Is that just for you to understand what's going on here? I mean, if you're talking about adding logging, that makes sense to me. You could rerun this thing with logs and you could understand better what's going on. So I still don't feel like you fully understand what's happening here, to be quite honest with you. I feel like you need to add logging and really understand this in detail and maybe even just get this one specific time frame, which it seems like March 28th, 2025 up until April 11th, 2025. That's like a clearly a problematic period. And with that backtesting artifact I showed you, you could like really see all the problems there. And then number five is, can you confirm the exact ENV profile BossBot production uses? It's the one that I gave you. I gave you the environment variables I uses. These are them again. Use these environment variables. This is the same as production. I still don't feel like you understand this very well. I think you need to uh, isolate this and rerun it with a lot more logging and really understand in detail what the heck is going on here, because the portfolio value should not be moving up and down like that. This is not a UI bug. There's a problem in calculating portfolio value. Okay, here's a 1 month back test. No, we need to please run a 1 year back test like we did before. I think we'll let this finish, and I think we'll probably deploy this as well. Let's watch this back test for now. Sharp ratio is not bad, 0.73, but that's over only a month. Why don't we call this the XSP wheel? And then we could deploy this as well. Start trading. Actually, back. Make a new account, new paper account. We'll call this the XSP wheel. And then we'll connect it to that account. And we'll actually watch this thing paper trade for a bit. XSP wheel, there we go. Allow. Let's deploy this. Oh wow, it did 10% drawdown. I guess that makes sense. This is with a much bigger position. Yep. Here comes the snow. Actually seeing some snow outside now. You even hear the cars going over it. Hopefully we don't get hit like New York. Just went flat for a bit. Maybe having problems actually finding the options here. It's gone whenever it gets like super slow and goes flat, it's usually when it's like having trouble finding options. Yeah, I think that there's something wrong here because it's not trading at all. Maybe the gap is too big between the bid and ask. Maybe spreads are too big. This is taking a very long time. It's taking much longer than expected, and it's flat. So I think probably this spread is what's happening here. Well, there you go. Now it's trading again. Why did it go flat for such a long time period? Well, that doesn't look too promising. 15% drawdown, 2% annual return. Yeah, I don't know. There are these big flat periods, though. I think so. This definitely is not as good as we were hoping. Um, and then also but I think there's something wrong here. There's these big long flat periods, where it just doesn't trade for long periods of time. Like why, like for example, it doesn't trade at all from June 2025 all the way to September 16th of 2025. What the hell? It didn't trade for such a long time period. I feel like there's something else wrong with this. What is wrong with this? Why isn't it trading like the other ones were? Let's see here. The performance was much lower. Da, da, da. Why the flat periods log show recurring message, no expirations. So XSP has less expirations. It's a great product for live trading. The historical data options of backtest environment has significant gaps, especially between those times. Results because the bot couldn't find any valid option contracts to sell during those months. Seems strange. No, I do not think you should switch back to SPY. I think you need to figure out why there are these gaps in the data. Like, I don't think there's gaps in data. I think you're just not finding the right contracts or something. You're saying that there's like I know the data that we're using and it should have data in those time periods. I think there's something else wrong here. I think you're wrong. Okay. Either way, guys, we're past time. I deployed this strategy, so it's going to be running. We'll see how this actually performs, and then I'll keep playing around with this a little bit and see if we could figure out, why there's all these gaps. But yeah, I mean, the wheel strategy sounds interesting. It just sounds like, it's not like you're not shooting the lights out with this thing. I don't think any amount of changes to this will make it be some magical strategy that makes us tons of money. But it does seem like something that could beat the market on a risk-adjusted basis. So I think that's pretty interesting. Yeah. Any other things you guys want to talk about before we finish up for tonight?
Nope, I'll see you tomorrow, but Rob, I got a Alpha Picks question for you.
Yeah, I saw that. I saw you send me an
Berkshire,
email too. Yeah,
yeah, Berkshire keeps trading. I think it has a problem with that dot in the symbol.
I think so. I think so. We fixed that in the past. I thought that was already fixed, but maybe we'll need to make another change to it. Yeah, we could take a look at that tomorrow
Yeah, no sweat. Yeah.
though. Okay, awesome.
Cool.
All
Have
right,
a great
guys.
night.
You too. All right,
Take
have a good
care.
night.
Bye
Later.
bye.
Bye.
Good night, everybody.
Good night.